America. So basically the whole purpose of being here is just to inform you of what you should do in the aspects of once you are a realtor of business banking, setting up an LLC, building up that business credit because you are your own business, you're independent contractors, and you want to make sure that you're set up correctly with your finances. And then we do have Danielle here.
Hey guys, I'm Danielle. I partner with Giselle over at Bank of America, ADP side. So we kind of help you guys pay taxes and payroll throughout the year. That way you're not ending up with a big lump sum of taxes. And then set up retirement as well.
But we ask you to speak up, please.
Oh, sorry. Hi.
Hi, how are you?
Good. How are you?
Thank you.
You good?
Yeah.
Okay, go ahead. Alright, so I'm just going to quickly just go over some of the benefits of setting up an LLC for your business. Main thing is it's just like tax liability, right? So you're showing houses, you're driving. If unfortunately somebody files a lawsuit against you and you don't have a corporate structure in place, it's your personal assets that gets taken away from you. So we don't want your car, your savings, things of that sort being taken away. So that's basically the main advantage of an LLC is because you're basically taking liability away from yourself if anything does happen. There's a lot of tax advantages, you earn higher income. Obviously, with IRS, you do have a lower risk of getting audited, which is nice. But it basically just keeps personal and business completely separate, which I highly do recommend. So with setting up an LLC, you do want to pair that obviously with a business account. So obviously I work for Bank of America. Bank of America has a great business banking relationship where we offer business accounts, business credit cards, business auto loans, lines of credit. Because I know you guys do use your own vehicles to go back and forth from showing homes. You definitely want to put that vehicle into the business as well. Less tax liability, and then obviously higher income for you guys as well. So, is everybody familiar with like setting up an LLC? Yeah?
No.
No? Okay.
In theory.
You could file an LLC basically in any state you want. It is highly recommended to set it up in the state where you're doing business. So the Arizona Corporate Commission is where you would set up your LLC. It's very, very easy. You would just go online to the Arizona Corporate Commission. You would file LLC. They ask you the basic information, your name, your social, your address, the type of business you're having. If there's any other members in your business, most likely it's just you. And then usually the approval is within a couple weeks. It's only $60 to file and $30 to expedite. Once you're approved, you will have your business name. So a lot of my clients that are real estate agents will have their name LLC, right? Or, you could choose whatever you want. You could choose your last name, like for example, Shares I Realtor LLC.
You can't as a realtor. You cannot as a realtor.
You can't?
No, there's specific PLLC guidelines to check with the Arizona Department of Real
So
Estate.
you could have your name and then put PLLC,
Check with
right?
the Department of Real Estate. I'm not an expert, but you
Yeah.
can't have.
It has to be your real estate name.
That's been saying in the
Right, yeah, and I'm so
Arizona
sorry,
Department of
yes.
Real Estate.
So, yeah, a lot of my clients will have their name and then either PLLC or LLC, whatever you're registered as. Thank you for clarifying that.
No problem.
And then secondly, you want to obtain a tax ID, and you just grab that from the IRS. I'd avoid using your social. Again, this is your business. You want to put it under a different tax ID. And you grab that by just going to irs.gov, apply for an EIN, which is an employee identification number, put in your basic information, and within seconds you obtain an EIN number. And that would be for all records. So when you're filing your taxes, that's what you would use to file it instead of your social. And then there's no cost for obtaining a tax ID with EIN. So once you have both of those in place, you would then go ahead and open the accounts. So you'd open up the business account, you can open up the business credit card, you can do a business auto loan. The great thing with banks is you don't have to be a minimum number of years to do so. Some places do require you to be working or your LLC within 2 years, but you don't have to right when you get your LLC, you can open up a bank account, credit card, business auto loan if you need to. Bank of America right now, does have a special offer. If you are interested, we're basically offering you $500 to bring over your business relationship with us. And it's basically opening up a business account, pairing it up with a business credit card, and then boom, you get the $500 deposited into your business checking account within 60 days. So, nice little perk for given.
Minimum credit scores or anything like that?
So for the business credit card, typically Bank of America, we do require around 680. If it's a little bit lower, I mean, it really depends on your relationship too. So if you have a personal relationship with the bank, they also look at that. Yes?
There are minimum transactions before you were allowed to get credit.
I'm sorry, say that one more time?
Is there an amount of transactions limited before you're allowed to get credit? A lot of times you got to do X amount of credit, business transactions before you can collect your credit.
Oh, no, so you mean like to build up your business credit?
No, you're $500, what you're saying.
Oh, I'm so sorry, yes.
So what I'm saying, usually they have some things where you go, okay, when you, after so many transactions
Yeah.
or something.
So, yeah, the 500 flyers, I can give you the specifics, but it's basically opening up a business account, depositing $5,000 in the first 60 days. It doesn't have to be at once, and you can actually move that 5,000 right back into wherever you put it in. And then with the credit card, all you have to do is just spend $500 in the first 60 days. So 2 months. You pay a bill on there, you can put gas in your car, buy groceries. Those two together would give you $500. Any other questions?
And then once you guys get your entity set up, we're kind of wondering, like, how are we going to pay ourselves? So through ADP, we can process just owner-only payrolls. Most people go up with that frequency of like quarterlies or annualies. I would talk to your accountant and see how often you should be processing your payroll. Just helps to eliminate the audit at the end of the year or owing a bunch in taxes to just kind of separate it into quarters. Also, it helps to show proof of income too, like as real estate agents, you guys know, like if you're buying a home, like you would be able to show a pay stub. So if you guys have any like big purchases coming up in your lives, it'll help to show that too. That's about all I have.
Yeah. So does any of you guys have any other? Yes.
To change your LLC to PLC, how do we do that? We go to the.
If you currently have an LLC and you want
But I cannot use my LLC because I'm an agent, I'm not a broker anymore. So
okay.
to change it from LLC to PL.
Yeah, you actually could do what's called an amendment through the Arizona Corporate Commission. Yep, everything is done online. I mean, you could always go to the Corporate Commission in Phoenix. I just don't know how long their lines and things are, but yeah, just go online, an amendment, you want to change your LLC to a PLC or vice
And
versa.
with the IRS, it's the same IEN number?
You can use the same EIN number, or you can go ahead and apply for a new one. Yeah. Yes.
We would be discussing the difference between LLC and PLLC.
Yeah, sure. I didn't really bring too much into that, but basically the difference is one's obviously a limited liability company, and then the other one's a professional limited liability company. So a lot of, I guess, business owners that file under PLLC or professional, anybody that has a license, basically. So obviously brokers, real estate agents, who else has licenses? Doctors. As long as you are registered, have a registered license in the state to operate, you can do as a PLLC.
I know we jumped ahead, I just wanted, because I always wanted the tax advantages between, I've been hearing federal tax advantages, would that be discussed?
Yeah.
Yeah, I think CPA is coming in later.
Exactly, yeah,
That's
we
all I
kind of
wanted to
keep
do.
it.
Regular PLLC filing as a
That's all, that's what I
Yeah.
wanted to know, thank you.
Exactly, yeah, the CPA will go ahead and discuss
Your
all that.
contact information?
Mine? Oh, actually, yeah, I'm actually gonna pass, all my cards around and also the flyer that has the $500 bonus, also has my information down here. I'm actually right here at the Right Tree 101, so I'm right across the street from you guys. If you wanna make an appointment, I can get it set up. I can also do it without you being there. I did bring some signature cards. If you guys wanted to do it today, all you need to do is sign, and then I would get it set up for you and email me the documents. So, very simple. Anything you have else to say? No? Okay. Oh, and my other question was, has any of you guys ever had any other businesses before? Yeah, what kind?
I have a freelance bookkeeping company, I'm a controller, so I do freelance bookkeeping on the side, so I have an LLC.
Okay, so you're familiar, right?
Absolutely, I have an LLC for this too, or PLLC for my real estate as well.
Yeah, absolutely. Any entity you open, it's separate by itself, right? So you need a whole brand new bank relationship for that, for your realtor, so it's, yeah.
Do I need the EIN, I came in a little bit late, I just been sitting over here, do I need the EIN number for my PLLC?
Yes.
Oh, do you use the same EIN number if you open up another one?
No, you wanna keep them separate, because each LLC or corporation, you're gonna file separately for taxes, and that EIN is what you file when you're, filing your taxes, you want to keep them completely separate. Yeah, okay,
Don't mind me.
Yeah, if nobody has any other questions, I'll let the other speaker. Yeah. I wanna pass out my cards. This one just go around the room, pass it over, right?
Yeah.
Just speed up some more.
No, you only get one. I need all the rest. I need your contact information.
500 right?
Good morning, everybody. My name is Rob Shocker, and as you pass out the information here from Giselle, I'm just going to do a little introduction on myself, let you guys know why I'm standing here, and thanks for Kelly for bringing me back again this year. These are always great classes, and it's kind of funny. I do a couple for her throughout the year, and when it's in March, everybody's here. It's very relevant to tax season. If it's in October, November, it might be half the room, so. Thank you for coming. Exactly, yeah.
Rob, do you have enough handouts?
I don't have any handouts. No, I'm just gonna do
this is
strict
from the last.
education for you guys
Perfect,
today.
okay, go ahead.
Yep. So take as many notes as you want, listen to what I say, apply what I say, don't apply what I say, it's up to you. You're not paying me to be here today, so completely up to you guys. So I moved down here with my family in 1978 to Litchfield Park, which is on the west side of town. Has anybody sold any homes out in Litchfield? Awesome. Okay. I do see some familiar faces from other seminars here too, so good to see you guys. So we moved down here. My dad got a job working with a partner, so he came down here and opened his business. And through grade school, my fondest memories were taking vacations with my family. So my dad was a marketing consultant, and he got to travel. So as a family, we got to travel with him. So that was a lot of fun growing up. In my freshman year of high school, my their business has grown so big that they decided to separate and take out their own businesses. So when they did that, they had to find another CPA that could handle that book of business. So my dad reached out to his friends in the West Valley, asked for a CPA recommendation, got one, jumped on board with that CPA. So from that time forward, what my dad was doing was giving financial reports to the CPA every year. He'd come into the office, drop them off, he'd come back about a week or two later, sign the tax return, not a lot of questions being asked because he was getting a refund, everything looked great, up until my senior year in high school when that CPA was caught for doing fraudulent tax returns. So when that happens, they'll open up the entire book of business under that firm or under that CPA or under that tax accountant. And so they opened up my dad's book, all my dad's friends that were using them, all the business owners, and this CPA was going in and inflating certain numbers within the industries. So for you guys, mileage would be an easy one to inflate. Okay, so that's just one example. So I'll get into the details on the mileage, but he was inflating these numbers. So they went back in to all the returns and saw that all 4 years that he was using them, there were numbers that my dad couldn't come up with the receipts to show the expenses. Okay, so for you guys, documentation is everything. Okay, documentation, remember that word. If anything today, remember that word. Documentation is your best friend in an audit. If you don't have documentation to prove an expense, it's up to the auditor's discretion to allow or to disallow that expense. So it's pretty simple for you guys, and I'll get into the details and kind of the tricks of making sure that you're documenting things correctly and holding those for record. So back to my dad's story, he had to pay all those back taxes. Okay, you guys are all the signers on your tax returns. Doesn't matter what the CPA or the tax preparer is doing, it's your name that you're signing those tax returns. So if you get audited and you go to the audit and you're going to have to pay back taxes, that's on you. It's not on the CPA or the tax preparer. So remember that. Ask questions. That's what my dad wasn't doing at the time. So it was kind of a depressing period for my family. All the vacations stopped. My mom had to go to work. She was a stay-at-home mom for my entire life. They had to pay all these taxes back. So at that point in time, I changed my thoughts on what I was going to do for a living, and it was going to go out and it was going to educate business owners like you guys and to make sure that everybody's preparing their taxes correctly, maximizing your deductions and making sure that you're documenting everything so you can back it up in an audit. Okay, that's the only reason that we document things, is if we're ever audited. Otherwise, none of us would have any receipts, right? So that's a little bit of my story. So that's why I'm here. I went and got my degree. I got it in the accounting field, and I've been doing this for a long time, and it's helping people save money in taxes. That's my goal. So I'm going to hit a few subjects today. I know I'm limited on time, so it won't be my normal seminar, but I am going to talk about some key deductions for you guys. And the very first one is your vehicle. Your vehicle is probably your biggest tax deduction, depending on what your marketing expenses are. But your vehicle, so there's two ways to track that deduction. You can do it through mileage, or you can do it through actual expenses on the vehicle. So just a show of hands, how many people track mileage in this room? Okay, that's a good majority. How many people track actual expenses on the vehicle? Okay, I see less hands go up than the whole room here. So if you're confused about that, that's okay. What I don't want to see with my clients is when they come in, they're tracking both. Okay, because that's a waste of time. I'll be able to tell right away whether you're going to be able to take actual expenses on the vehicle, if that's going to be a benefit, or you're going to take mileage on the vehicle. It's just a quick series of questions. For brand new real estate agents, it might be beneficial to track both for maybe about a 4 or 5 month period, and then we can decide. But if you're a seasoned agent and you don't know which benefit is there, you should. It's very simple, just a series of questions. How long are you going to keep your car? What's the purchase price on the vehicle? There's a number of questions that I can ask and easily figure out what that benefit's going to be. So on the mileage, if you guys are tracking mileage, make sure you're documenting your mileage, okay? Because this is one of the categories for real estate agents that auditors love to audit. Okay, that's the first category they'll look at, is your mileage log. So make sure when you guys are traveling, does anybody use an app? Okay, show of hands. All right. Mile IQ, is that the app that you're using or something similar? Okay. Mile IQ. Yeah. Mile IQ is probably the best one. I believe it's $6 a month, so it's inexpensive. So this is going to be kind of a funny question. Does anybody track mileage throughout the entire year, every single day? One hand, 2 hands. Okay, you guys are brave. All right, I'm gonna help you save some time here. So in the IRS code, a way to track deduction and maximize your mileage. So a lot of people just say, yeah, we're just going to do 80% this year. We're just going to do 70%. That's fine. You're probably not tracking mileage when you're talking about that. So you're just going to be comfortable and stay under the radar on a red flag. Okay, that's fine, but I want to maximize my clients' miles, So I'm looking at that. So we take a 90-day period. In the IRS code, it's a 90-day period. It has to be consecutive days. It has to be meticulous record keeping on your mileage log. So like if you're coming here this morning, if you're using Mile IQ, you swipe slowly to the right and you document it. If you guys don't know that, you can do that. You can document in there, you just swipe slow and you can put a note in there. Do that over a 90-day period. And with my clients, I always tell them, do this when you're driving around the most. Okay? Not necessarily for business, because I teach everybody how you can track mileage as a business, but when you're driving around the most. Okay, for real estate agents, you guys can travel anywhere in this valley and preview a property. Doesn't matter where you're going. Okay, so let's say you're going to a friend's house for game night, and it's across town. Well, what your thought should be when you leave that house is, I'm going to preview a property. It's going to be in that neighborhood. And that's what you're documenting on your Mile IQ. So you're working in your business, you're staying on top of that as far as your documentation goes. Now you're previewing a property. Now you know another property that you might have a client or a referral to another agent that you can use there. So it's always thinking about business first. Anytime you guys leave your house, it's always, where am I going and how do I turn this into a tax deduction? And specifically in this 90-day process, so you guys can track this. So for my example, my girls play club volleyball. Anybody have kids in sports? You're traveling quite a bit all over town. So I like to use my 90-day when we're doing this. And there's key spots for us. So there's, out in Queen Creek, there's a place called Barney Sports Complex. And we go out there a few times a year. I live all the way out in Verrado, so it's about an hour and 15-minute drive. So what I'm doing, I'm not going to watch volleyball on my Mile IQ. I'm actually going to a place called the Pork Shop. Has anybody, you've heard of it, right? Because I've told you twice.
Yeah.
So the Pork Shop, has anybody been out there in Queen Creek? Okay, you guys need to go. It's awesome, but it's a family-owned operation, okay? It's not like a Starbucks on every corner in the valley. This is a single place. It's a family-owned business, and I'm going out to the Pork Shop to buy a $25 gift card for one of my clients. I'm going to watch volleyball all day. Okay, I get to enjoy watching my girls all day, but I'm buying a $25 gift card for my client that I'm going to be seeing the next day. Okay, so think about that. That's how I can get that mileage as a tax deduction. So for you guys, like I said, it's a lot easier for you because you're real estate agents. And you guys can preview properties anywhere. Okay, I can't do that, so I have to get a little bit more creative, but that's my example on that. So that's just teaching you guys how to think about when you leave the house, how are you going to get this as a tax deduction? Okay, so keep documentation on that. Actual expenses, if you're driving all over the place, it might not be a tax benefit for you depending on the purchase price and how long you want to keep that vehicle. Okay, so actual expenses are going to include your interest on the payments. It's going to include everything that you buy for the car, an air freshener, oil change, tires, all the actual expenses that you're putting towards that car. Fuel, insurance, all of that.
Car wash?
Car wash, absolutely. Casey lines from back in the old day, right? So all actual expenses, that's what you guys want to keep track of. Typically, real estate agents like to trade out cars. Okay, you don't like to keep a car for 10 years like I do. Okay, I like to maximize my benefit, and I keep my car for a long time. So I've got a 2001 Ford that I still drive. I'm not taking actual expenses on that because after the 5th year, my depreciation on that vehicle is over. Okay, that's one of the key pieces to that actual expense is the depreciation on that vehicle. Once that's over, now it's just the actual expenses, no depreciation. So that depreciation should be thousands of dollars every year for the first 5 years until it's taken. Okay? If you're taking actual expenses on the vehicle, you cannot go back to mileage on that vehicle. Okay, you can trade the vehicle in, and then you can make another decision whether you're going to do mileage or actual on the vehicle, but you can't go back. Okay, you can start with tracking mileage on the vehicle and change to actual expenses. That you can do, but you can't do the reverse. Okay, so, yes, absolutely.
Related to that, I wish I could remember the deduction, but there's a deduction, I'm sure you're super familiar with it, in reference to buying a vehicle. If it's under 6,000 pounds, you get 25%. Thank you.
It's a 179 deduction.
So, are you able to take that deduction in addition to, say, mileage, or?
No.
Okay.
No, that's gonna be on an actual
Gotcha.
expense, so that's part of your depreciation is that 179. So, that's a great question, you guys, so in 2017 and prior, that expense was only good on a new vehicle. Okay, it had to be a brand new vehicle. They changed that tax law in 2018. So as of January 1st, it can be a new vehicle or it can be a new vehicle to you, which is a used vehicle. It doesn't matter if it's new. So it can be new or used to use that tax deduction. So,
Yeah, I was gonna ask about 179, because I did that with the bonus depreciation.
Mhm.
How often, because like you said, agents like new cars every couple of years, how often can you use 179?
you can use it on each vehicle.
I don't know.
But if you're, to go into more detail, I won't do that today, but you have to trade in the vehicle, there's a lot of things that go into that.
And then when you do that, like you said, you can't use mileage, it's actual.
That's right, yeah. Once you guys decide you're taking actual expenses on the vehicle, you can't go back to
But you still have to
mileage.
do the 90 days to get your percentage of.
You can, so here's another thing, so, and that's a great point. What I do every year and what I recommend to my clients, the first week of January, whether you need an oil change or not, go get one. And the reason why is because you've got a third party that's got your odometer reading for the entire year. Okay, it's not just something that you're writing down on a piece of paper, that stands in an audit. So, that's a good rule of thumb, if you're doing actual expenses and all that stuff, get your odometer reading every first week of January.
If you're using actual expenses, are you still required to keep mileage on?
You can, but it's not necessary. You know, you just need to document what you're doing, on the vehicle, you don't have to document all your mileage. Okay, but if an auditor wants to look at that, then I would have to go back to my client and say, yeah, we need to make something up here. Okay, you gotta go back to your calendar, all that stuff, but that's the part where you don't, and that's not typical, okay, in an audit. If you're doing actual expenses, they're looking at other things. So, I don't want you guys to track twice as much than you have to. Okay, I've got clients that come to me and they say, we've been doing this for years. Well, it's not really, it's, you don't need to do both. It's doing twice the amount of work.
Can you just take a picture of your odometer?
You can.
Timestamp.
Yeah, absolutely. But if you got that third party, that's 100% audit proof. Okay, you can take a picture and that's fine. Yes, ma'am.
If you have a leased car, can you still do the actual expenses?
You can.
Some of the maintenance is part of your lease.
You can, yeah. And so with a lot of leases, they include all the maintenance and all that stuff, so it's all lumped into one payment. I really only have a handful of my clients that are real estate agents that lease vehicles. Okay, one's in Verado and one's in Anthem. And they sell in those communities and that's it. They're not driving all over town. Okay, so it depends on what car you're leasing, what the payments are. The last thing that I wanna do is have my clients go out and lease a vehicle because it's a better expense, it's a higher expense. That doesn't make sense to me from a tax standpoint. You know, if it makes sense to somebody to have a really nice car, that's a whole different ballgame, I can't argue with that. Okay, but I don't want you guys to spend more money than you have to just to get the tax deduction. Okay, so going back to the mileage, maxing out this 90-day period, and that goes with the odometer reading. Like I said earlier, people say, yeah, 70–80%. If you've got this 90-day period that you've tracked all this business miles, your odometer at the end of the year says, let's say 25,000, and your calculation on that 90-day comes to 26,000, I could back that down to 25,000 and get 100% of your miles. So that's a big deal. You know, if you're talking 20 to 30% that you're just kind of pushing away because you don't want a red flag, do this, follow this process. It's a great way to save money. Okay? So let me talk about, yes, sir.
If you buy a new car and then it's depreciated over a 5-year period and then you want to actually purchase that car for your personal use and not use it for real estate anymore, what happens?
There's disadvantages to that. Okay. And so there's also disadvantages to a car. So the question is, if you're taking actual expenses on the car and then you decide to get another car and drive that car, there's disadvantages to that. There's also disadvantages to giving a car to your child that you've been using for business. Okay, because I know a lot of people like to do that. So when your son or your daughter turns 16, you know, here's the car, mom and dad's gonna go buy a brand new car and we're gonna drive this around. There's disadvantages to that as well. And any of this stuff, you guys, you can contact me, set up a, you know, maybe just a phone call with me, but I'm not gonna cover all the details on that through this, because I've got a little bit of a crunch time here, so. I am gonna move into some marketing expenses, meals, stuff like that. So, who likes to have parties at your house? Anybody? I wanna see a show of hands. Parties? We got partiers in here? Okay. If you're having any type of a party, I don't care what it is, friends and family, you can track this as a tax deduction. Okay. Who should be your number one referral source? Friends and family, and if you're married, who's that gonna be? Your spouse, right? Because it's their bank account too. Your friends and family should be referring you the most. Okay, when you have people over to your house for a birthday party, track this as a tax deduction. Okay, Giselle talked about the PLLC bank account. Make sure that you're doing that through your business bank account, or if you guys have credit cards, if you don't have a PLLC, use a credit card specifically for business deductions. In an audit, the worst thing to do is to commingle your bank accounts, because the auditor gets to come in and ask questions on everything. Okay, and that's a disaster. So, if you don't have a PLLC, and you don't see the point in having a PLLC, which could be from a number of reasons, grab a credit card and just use that credit card for expenses only. You can still get paid under your name and your social security number, but all your expenses are going through that account. Okay, the auditor comes in, all you have to do is go to that account. PLLC, same thing. That's the best way to run your business, is through a business bank account, all income and expenses. And I'm going to get into that detail a little bit later in the seminar. So, having parties at the house. Let's say you go to Fry's 30 times throughout the year to buy groceries, but 5 of these receipts you're claiming as business tax deductions, and the auditor comes in and says, why are these tax deductible? These are all groceries. They can see the receipt. What you've done with that receipt for document purposes is you've written referral networking. Okay, that's what you need to write on there. You can add some names to that receipt, but the key to this tax deduction is when you go home, so you're not catering food in. You're going to Costco or Fry's or something, you're buying everything and you're preparing everything. This is a whole different deal. So this is a marketing expense. You're bringing people over to the house. You're going to take a picture at the house in front of some of your marketing information on a table like this with a handful of friends and family. That picture is going to show the relevancy to that receipt, which shows that this expense was for business, not for typical groceries. But you have to have that picture in order for that deduction to stand. Okay. Now, what I don't want you to do, if you guys have a regular poker party, or if you girls have a regular bunko party, or whatever it is, don't take a picture with the same people every month. Okay. Change it up a little bit. Mix it up a little bit. Get pictures though, because the pictures is what's going to hold that receipt to your deduction. Okay. Meals and no longer entertainment. You guys know about that? Okay, entertainment expenses are no longer tax deductible. You can't take people to a ball game. You can't take them to a concert. You can't do any entertaining expenses. No more golf. It's kind of a sad deal, but that's just the way it is. So now you just have to do it out of the kindness of your heart. Okay, you can't take it as a tax deduction anymore. So meals you still can. So make sure with your meals. So the number 2 category that auditors look at for real estate agents is meals. Okay, miles, meals. Meals, I want you guys, whenever you're going and you're at the restaurant, you pay for the meal, before you put that receipt into your pocket, write the name of who you're with on that receipt. Or, let's say you're with your spouse and you're across town. You can take meals with your spouse still. If you're across town and you don't have time to come home, stop for a meal, talk about that property that you guys were just previewing. Okay, write that property address on the receipt. So what an auditor does is they come in and they'll look at this category. You'll give them a stack of receipts on your meals. They start going through every one of those. If there's no documentation, it's a field day for them. If they see that you guys have notes on every one of these receipts, they don't even get a quarter into the whole stack. They push it aside because they know that you guys are documenting things correctly. Okay, it's a waste of their time to go into those questions. And that's the first thing. They don't want to waste their own time. Okay, it's never about you guys. Okay, so make sure that you're documenting things like that.
Is there any such app to handle receipts? Because I don't know, like my receipts, they disappear. They
Yeah.
off
Yeah.
and
So there's plenty of apps, and I don't have a favorite, but I will tell you what I use is my picture on my phone. That's all I use. I don't use an app. I've got a number of receipts here. Every month I dump them into a thumb drive and I put them in the cloud. So I've got 2 places where I have them. Okay, so I use Outlook, I put them in the cloud, and I have them on a thumb drive. Yep, so every one of those pictures goes into that thumb drive, and I just hold those for 7 years. 7 years is key because that's as far back as the IRS can go on your tax returns. So make sure that you're keeping those documentations.
Now, I thought we were told last year, the year before, that you can only do half of meals or something.
Yeah, that's correct. That's still, yeah, so
Okay.
the meals are always 50% deductible. But if you're using an accountant, you're giving them 100% of what your number is, because it's 50% deductible on the tax return. So don't ever do the calculation yourself and give that to your accountant. Okay, give them 100% of what your meals were, because that comes out on the tax return. Okay, yes, sir.
What was the one you said it was no longer deductible? I thought that was meals. Did I miss something?
No, meals.
Oh, entertainment.
Entertainment. The category used to be called meals and entertainment, and now we just cut it short, and it's just meals.
No more entertainment.
Nothing else. Yes, ma'am.
For the party, that you talked about, does the venue matter? Does it have to be like, can you do it anywhere?
Well, so if you go to a restaurant and you have a party there, then that's going to be more of a meals expense, because somebody's preparing the food for you.
Okay. Or you do it at a park, like
Yeah, no, you're good.
birthday party
Yeah,
for your kids?
absolutely. So if you have to rent the space, you know, then that's part of the tax deduction. Absolutely.
So then that's not entertainment, that's
It's a marketing, yeah, because that's a referral networking function event you're putting on. Okay, you're not buying tickets to a ball game or something like that. So, absolutely. Okay, so first of all, show of hands on who has a PLLC in the room.
I have an LLC.
Are you a broker? Okay, so let me go back to that, because I think she said something that may have confused you guys, so I'm just going to clear this up. Real estate agents in the state of Arizona have to have a PLLC. You can't operate under an LLC unless you're a broker. Okay, so a licensed agent in the state of Arizona, you have to have a PLLC. And it is very specific how you set that up. I know that she said it's easy, it's simple, but you have to make sure that you got to follow exactly what you need to do as a real estate agent, because if you don't, it's a nightmare to amend that and go back, because you're dealing with the Arizona Department of Real Estate as well.
And how to apply for PLLC? How to start?
You go to the Arizona
Yeah.
Corporation Commission and you file articles of organization with them. Okay, so my biggest tip, so if you guys do this yourself, that's fine, just make sure that you're doing it correctly, or advise with somebody or hire somebody to do it. Okay, either way, for real estate agents. Setting up LLC is very simple. Okay, but for real estate agents, setting up a PLLC, it has to be super specific. So make sure that you're doing that. But make sure it's also your name that's set up with the Arizona Department of Real Estate. Yes, sir.
Can you add a second person to an existing PLLC?
As a real estate agent, if it's your spouse, you can, but that's the only reason. So husband and wife or spouse, you guys can operate under the same PLLC. So let's say you set up a PLLC 3 years ago under your name, okay? And then your wife becomes an agent, she wants to get on that PLLC. You can amend that and add her to it, but you have to change the name of it. Okay, each of the names have to be on that PLLC. Yes, ma'am?
If you have more than one agency, can you have an LLC and a PLLC?
If you have more than one agency. So are you,
Different businesses.
as a real estate agent?
You have 2 different businesses.
So 2 different
You have an LLC
businesses,
and a PL.
outside of a real estate agent, you can have an LLC, absolutely. Yep, yep,
Does the spouse have to be a real estate agent if she is put on that?
she does. She has to be active and licensed. Okay, so like I said, it's very specific. You guys. It's not, I don't mean to downplay what she said, but it's not as simple as it is to the general real estate public. Okay, you gotta be very specific with these. Yes, ma'am?
What are the tax advantages between, PLLC and
I will get into that at the very end. Yep, I'll come back to that.
I'm a little confused with the LLC. I had a couple LLCs, but I was, it was back quite a few years, but I was flipping properties.
That's fine.
Oh, okay.
Yeah.
So that, I was still a realtor, but I was doing that.
No, you can use the LLC to flip properties.
Okay.
Absolutely, that's a whole different business. Yeah. Yes, ma'am.
Just a real quick question on the name. my name's Regina Gertis, my legal name, but I've been Gina since birth, so everybody knows me, so I'm having an issue with my branding. I set up my PLLC with Gina Gertis, is that a mistake?
It's
Or is that
correct.
okay?
Yeah, you,
Yeah,
it's,
you do it, I did that
yeah.
too.
Did you? Okay, so I need to go back and do
Yeah.
this, I've been.
yeah, you'll have to amend that. And like I said, you guys, I'm not trying to put money in my pocket, I'm not trying to put money in your accountant's pocket, but make sure that you're advising with somebody or hiring somebody to do this. Like the LLCs, you know, if you're flipping properties, that's simple, you can pick any name that's available. Okay, but as a licensed active agent, it's gotta be very specific, yes ma'am.
But the PLLC, can't you do a DBA, do business as?
Well, as a real estate agent, no. I want you guys, that has to be very specific because you're paid from your broker into that PLLC. And that has to be approved through the Arizona Department of Real Estate.
Well, they do.
So it's very specific.
They approve my nickname, Jack. My name
That's-
is Jacqueline, I go by Jack. But for the PLLC, my question is, can I do it as, Jacqueline and
That's what the
Munoz
rules say,
and then
let's-
do business as?
No, so what I recommend to my clients, if you wanna brand something, so if she wants to brand it Gina Homes, you can brand it all you want.
Sure.
You can put signs on your truck, you can do all that stuff, but your broker's paying your PLLC. Okay, so you guys can brand, you can make up any name that you want, you don't have to register that with the state, you can brand however you guys want to. Okay?
You do have to register a nickname at the state.
Absolutely,
Department of Real
yep,
Estate.
but what I'm recommending is that you just keep that PLLC. Okay, let's not confuse the IRS or the Arizona Department of Real Estate more than we have to. Yes, sir.
Can you so let's say if I already had transactions this year, I don't have my PLLC set up yet, is there any way to put it into the PLLC? How does that work?
Yeah, you can, so at the end of the year, you have to file a Schedule C, depending on if you're transitioning to an S corp, is that maybe where you're going with that
Yeah.
question? So, it absolutely is possible, and I do it every year. So I'll have people that come to me and they say, you know, I'll get into more of the details a little bit later, and I'll come back to that one.
Okay.
But the reason I'm asking who has a PLLC is the second question is who has kids between the ages of 7 and 17. Okay, and then keep your hands raised if you have a PLLC in that category. Okay, so there's 3 of you in here. I'm just gonna touch this real quick, because there's a lot of details that go into this, and you guys, the 3 of you can call me, and I'll go over the details with you on that. But having a PLLC, having an entity in the state of Arizona, you can pay your kids between those age ranges to help you work. So for agents, the best thing for you guys, bring your kids to the open house. Spend time with your family, you know, make it fun.
You
Go.
can pay your spouse too, right?
You can't pay your spouse. I mean, you can, but then you'd have to 1099 them and all that stuff, so we don't wanna get into that. Just have them do sweat labor. Okay? Just put them to work. Just put them to work. But the kids, so you guys can take them to the open house. Now, when you go to the house, you got the kids with you. Okay, get them involved. Get them excited about it because you're there to sell the house. Okay, if nobody shows up that day, well, at least you got to hang out with the kids and you paid them. It's a tax deduction, so it's a win-win for everybody. But when you go into that house, have the kids walk around and pick out the best kids room. You know, have them find the favorite kids room in the house. So when a family comes in, now your kids are involved, and you can say, "Hey, my kids will take your kids to the best kids room in the house." You know, get them involved like that. Have fun with them. Take board games. You know, if nobody shows up, at least you got to hang out with the kids. Do that.
So what are the advantages for PLC for agents or still agents, the main ones?
I will get into that a little bit later. I'm just going to stick to the specific topics right now, you guys, and I appreciate the questions, and I'm sure you guys have 100 questions, but I'm going to stick to the topics for the meantime.
What's the max you can pay them?
$6,350 a year per child. Okay, and that requires no W-2 and no 1099, as long as you're under that limit. So my girls, I've got a 17-year-old who's a senior and a 14-year-old who's a freshman. My oldest makes about $3,200. There's no way I can max out because it's per hour. They just don't have the time to do it. My youngest makes about $2,100.
So you can pay them by hour, but.
Well, hour or job related expense. So let's say you're working on a brand. Okay, and you're trying to come up with a logo. My 17-year-old can create a logo. You know, I would pay her for that type of job. You know, if I'm going to go out and hire a logo company, let's say it's going to cost $450 to do a logo, then I would pay her for it. Okay, or your child for that. Yes, sir.
How do you document that, Rob?
Okay, so like I said, there's details that go into this, and I don't want to. With 3 people in the room that qualify for this, you guys reach out to me.
Video it.
Yeah, but, yeah, if this sounds like a great tax deduction, have more kids, right? Well, start having kids, okay? Because you can really get benefit from this tax deduction. But you guys who qualify, I'd be happy to talk to you, at another time on a phone call or something like that. So, it's a great tax deduction. It's a great way to get the family involved, and it's just a nice thing to do. I think somebody in Congress passed this years ago because they had children within those age ranges and they wanted a tax deduction, and it passed. So not a lot of people know about it, and not a lot of people know about the specific details that go into it. Okay, so moving on. I talked earlier about vacation. Vacation is my favorite tax deduction, and one of the reasons why I'm wearing a Hawaiian shirt today, and I don't normally do this through tax season, but we're booking our Hawaiian vacation tonight with the family. So, vacation is such a fun deal, and take the family and turn it into a tax deduction for you guys as real estate agents. This is super easy. It's pretty easy for me because I do seminars out of state as well. So when I'm traveling, I know what to do. I know how to track this correctly. But for you guys, there's 3 steps to the IRS code to follow this in order to take this as a tax deduction. Okay, so I'm talking about a personal vacation. I'm going to use Disneyland for an example. So if you're taking the kids and the family to Disneyland, how do you turn this into a tax deduction? Does anybody know that hasn't been in one of my seminars yet?
I mean, have a meeting with someone.
Okay, that's a great start. You gotta have a meeting. Say again?
Go to another agent.
Go to an agency, absolutely. Yep.
Another broker.
Yep. So you guys are on the right track, but you have to follow the steps. So before you book any of the vacation, you have to pre-schedule a meeting with somebody in that town that you're traveling to. So if it's Anaheim, you're gonna reach out to either a friend that's a real estate agent, a friend that knows a real estate agent, or it can be just a complete stranger, and somebody that you wanna develop a business relationship with. Okay, well, a lot of people move here to Arizona. Okay, so it doesn't matter where you're traveling, you wanna pre-schedule this meeting with that agent. Okay, do that through an email, because that's how you track the documentation. So let's say you email John Smith in Anaheim, and you say, John, I'm coming into town and I'd love to meet with you Tuesday morning, 9 o'clock at the Starbucks right outside my hotel that's across the street from Disneyland. John replies back and says, absolutely, let's talk about a referral relationship. That's your first documentation that you need to keep for this travel deduction. Okay. So once you pre-schedule that, book everything. Book the hotel, book the flights, whatever you need to book for the vacation, do that once the pre-scheduled meeting happens. Okay, now the second step to this is you have to prove to the IRS that you actually met with this person. So that will come in the form of a receipt that relates to that email. So if it's the Starbucks right outside your hotel, you're gonna get a receipt from that Starbucks, you're gonna write that person's name on the receipt, okay? So let's say he said you go to an agency. If John Smith says, I don't have time to come to the Starbucks, but I'd love it if you could come to my agency that morning and spend a half hour, an hour with me, that will show on the email that you guys are meeting at the agency. Okay, you're not gonna get a receipt at that agency for buying a cup of coffee. So you're gonna take a picture in front of, in front of my home group with that agent. That's gonna show the auditor that you were at the agency. Okay, that's in lieu of the receipt. So step number 2 is the documentation, either the receipt or the picture. Okay, step number 3 is when you get home, you're gonna email this person and thank them for everything that you guys talked about. Okay, that's gonna be the 3rd piece of documentation that you need to keep. That's it. So, while you're on this vacation, you guys can go to Disneyland, you guys can go to the beach, do whatever you want to. That part's not tax deductible, okay? But all of your hotel fees, travel fees, whether it's mileage driving over there, and hopefully this is in your 90-day window that you're tracking mileage, okay? Airport fees, rental cars, anything that's expense, that's gonna be tax deductible for you. For you and your spouse, if you're flying, it's both of your airfare, it's not the kids. Okay, if you don't have a spouse that's a real estate agent, it's just your tax deduction. So do separate transactions. You get 3 meals a day while you're gone. Always do separate transactions because I want all my clients to run everything through their bank account. Okay, So do a separate transaction for your meal, and I've got a family of 4, so my wife and my 2 daughters is on their own, for that meal. That's not a tax deduction, okay? The time that you're gone, this is very specific to this deduction. 50% of the days that you're on this travel vacation have to be business related. Okay, so I'm gonna use the example of 6 days. So you're gone for 6 days. The IRS automatically gives you 2 days without you guys doing anything. 1 traveling there and 1 coming home. Okay, that's 2 days automatically. You never wanna schedule a business meeting on a travel day. Okay, unless it's 4 days, then it won't matter. Okay, because you're already gone 50% of the time within that 4 days that they've already given you. But if it's 5 days or 6 days, you wanna schedule that meeting on a non-travel day. So that's the 3rd day out of the 6. Okay, then you qualify for all of the tax deductions. If you're gone for 8 days, you schedule 1 meeting, you don't get any tax deduction from this. Okay, so if you're gone for 8 days, you're gonna wanna schedule 2 appointments on 2 separate days. Okay, and follow the guidelines of what you need to keep as documentation on each one of those.
So you're saying 4 days?
4 out of 8,
You
4
get
business days
to
out of 8.
write off 4 per meeting.
No, you can write off the entire vacation, all the expenses. In order to qualify for the deduction, you have to be there 50% of the days in order to qualify. Business related. 50% of the days have to be business related.
So in your example, out of 6 days, including 2 days of travel, the remainder 4 days, you need to have meetings on just 2 days, is that right?
Just 1 day. Yeah, because the IRS already gives you 2 for the travel. The 1 meeting is 3rd day, 3rd out of 6, that's 50%.
So they count the travel days as the business?
They do, yep, they automatically give it to you.
So you get 2 on each end of travel? Or just 2 on
1
the
day
end?
going there and 1 day coming back. Yep. Yep. Okay. Any questions on the travel?
What is the actual write-off percentage?
It's 100%, except for the meals. Meals are still 50%.
So airfare, hotel?
Yep, for your deduction, not for the family.
Right.
Yep, but the family gets to freeload on the hotel room, okay? That's their benefit. That's right, take more vacation. You know, you guys you just need to be aware of what the tax deductions are and what's available. Yes, sir.
Is the travel time always 1 day?
Yeah.
In other words, if you're driving, it takes 2 days to drive, it's
1 day.
still 1 day.
1 day there, 1 day back. Yeah. Okay, I will get into the PLLC now. I guarantee you guys are gonna have 100 questions for me. So let me get through it. If we've got time at the end, I'll answer some questions. If not, you guys can call me, or you can reach out to your own accountant, okay? If you don't know what I'm telling you already, you should, okay? And I'm not stepping on accountants right now, but if you don't know this already, you guys should know this, okay? Get the education or ask questions, but I like to give the information to my clients first, so they're not necessarily asking me. Okay, so there's a lot of reasons to set up a PLLC for real estate agents. They can be from a tax advantage, or they can just be from running a business advantage, okay? I'll start with just running the business. In an audit, the best thing to do is only go to 1 bank account. Okay, so for your business, if it's, like I said earlier, it might be a credit card, okay? But now we're gonna talk about the PLLC. So you get that established, you get the EIN number, you go to a bank and you open up that bank account. And now your broker's gonna pay you through the PLLC. All that commission goes into that bank account. All your expenses come out of that bank account. Okay, you can take your owner's draws, you can pull your own money out, you can put it into your personal bank account, but all the income and the expenses are gonna run through that account. And that's just coming from an audit standpoint to run a clean book of business through 1 account. Now, you can still have credit cards, that's not a problem. They just need to be specific for business. Okay, don't commingle a credit card in this case. So open up that bank account, run everything strictly through that bank account. Okay, that's one of the advantages. Second advantage comes from the tax advantage. Now, if you guys are at a certain income, it might make sense to restructure the S corp, like we were talking about earlier. So, if you're being paid right now through your name and your social security number, and you decide it's gonna make sense to restructure as an S corp, you can prorate that all the way back to the beginning of the year. It's a lot more paperwork with the IRS that your accountant should be filing, not you. This is very specific as well, so have your accountant file this information. It's a huge tax deduction. So the bottom line figure for me on this, to make sense, your net has to be at least $40,000. Okay, your net figure means total commissions minus out all of your expenses. Okay, if you're kind of hovering around that $40,000 net figure, that's the time where your accountant should have already been talking to you about it, or you need to talk to somebody about it. Okay, so if anybody's in this room and you're hearing what I'm saying right now and you're above 40 and you have been for years, you need to start talking to somebody else. Okay, it's always, you're handcuffed to the knowledge of your tax preparer. Okay, that's the bottom line. And a lot of people like to file Schedule Cs. That's a sole proprietor. Okay, on a tax return, it's the easiest form to file for a business is on a Schedule C. But it might not be in your best interest if your net figure is over $40,000. So start asking questions about that. Reach out to me, reach out to somebody like me that specializes in doing corporate tax returns. Find somebody if you're already in that category. So what you're doing is you're eliminating self-employment tax, okay, by being taxed as an S corporation. But you have to stay in compliance with the IRS. And there's a lot more expenses that go into that now because you'll have to do payroll, okay? So, with Giselle here earlier, we were talking about payroll. You have to stay in compliance with the IRS, and you have to follow those guidelines. So, make sure that you are using an accountant that knows what to do in these situations, okay? You're gonna have to pay into payroll taxes, okay? That's part of staying in compliance. There's a gray area in there that says you have to have a reasonable salary, okay? If you're not taking a salary and you're taxed as an S corp right now, you're subject to an audit. You're subject to a red flag, and that auditor can come in and they can hit you for all of the self-employment tax on that net income figure. Okay, so if anybody's in that category right now, make sure if you're taxed as an S corp, make sure you're staying in compliance with the IRS on that. Okay, it's a huge savings. The other advantages. If you're set up as an S corp, you're taking payroll. Now you've got a few different outlets for retirement income. Okay, you guys as real estate agents, normally it's just you under the PLLC. You don't have a staff, you don't have employees. You guys can open up your own 401k. It's a solo 401k, and I'm sure whoever's speaking after me, I think they're going to be talking about the financial part. That 401k is awesome, especially if you're at a certain level of income. Okay, if you're not really killing it in real estate, let's say you're 60,000 net figure, you're going to take a $20,000, $30,000 salary. You're subject to the income on an IRA contribution. Okay, so you're 25% on what your wages are, your earned income, which is your salary. So it would be a lot smaller number than the full 18,000 that you could put into a 401k. So you want to look at that. If your salary is a lot higher, and let's say you're making over 100 or over 200,000 in net income, then you guys can max out your SEP IRAs. The benefit to the SEP IRA is that it's a lot less expensive than the 401k. Okay, but you have to have enough net income to really make that worth it. If you want to shave that taxable income though, and you're under 100,000, your salary's not that high, it might be a good idea to look into that 401k and talk to a financial planner about that. Okay, I'm just coming at it from the tax savings standpoint. So look at that. The SEP IRA is awesome. The 401k is great. You guys can shave taxable deduction on that stuff. Okay? Are you already a PLLC set up as an S corp and have a 401k? Anybody in this room?
Well, I have not 401k, but I have a defined benefit pension plan.
Okay.
Can you talk a little bit about that?
I'll let the financial planner talk about that. That's not my field. I can only talk about it from a tax savings standpoint. But they are coming in next, so save that question in your pocket for the next one. So it's just a great way to save tax deductions. Okay, if you guys know about things ahead of time, you're not going to miss it. The worst part is when you get to the end of the year, you go to your accountant and you miss something. You didn't document something correctly. That's the worst part. So I try my best to educate my clients ahead of time, okay, and go through some of the tax deductions. I specialize in preparing returns for real estate agents. Okay, that's the category that I'm in. Okay, I'm not in the construction field. Okay, I'm not specializing in doing construction returns. I do real estate tax agents, tax returns, and that's where I specialize. So I try my best to educate all of my clients on the information that I learn on an annual basis. Okay, so that's it for me. My time's just about up. Is there any questions before I turn this over?
Your contact info.
Mike, okay, so I do have cards. Kelly has my information as well, if you guys want to reach out to Kelly for that, but I do have a stack of cards here that I'll leave up here, and you guys can come grab these.
Why don't you just put your name and number on the board?
I'll do that. I like that idea even better. Oh, that was
That was why you're not doing it?
Let's go with green because we want to save money, right? Hopefully you guys can see this if you're not colorblind. That's the back. So I'm going to say this out loud. This is my email address is rob@cleanlineaccounting.com. Cleanline. And you have to type it all out. And my office is located in Goodyear. Okay. I grew up in Litchfield, so I'm a West Side kid, West Side guy now. I'm not a kid anymore, but that's where I grew up. That's where my roots are. I started my business on my friends and family, and I didn't do any marketing. That just comes from referrals. That's the same thing for you guys in this room. Hopefully your best marketing tool is yourself, and you're getting referrals from clients and all that stuff, but that's how I started my business. Yes, ma'am.
I do have a question. Can you deduct rent from your home office?
Can you deduct, what was it?
Rent from your home office?
If you're renting, not your mortgage. I mean, you can, but I don't like to touch that one. If you're renting a house, you can take a certain portion of your rent. Absolutely. And so home office deductions, okay? A lot of people don't like to use this because they say it throws a red flag. I'm not scared of a red flag at all, especially if it's your tax deduction. Okay, I think the IRS uses that term to scare us taxpayers if we're going to throw a red flag. If it's your deduction, take it. If you can prove it in an audit, take it. Okay, an auditor will come in, they'll look at 3 categories first before they even decide whether they're going to open that up for an entire audit. So make sure those home office utilities, that's a great tax deduction. It's not a big expense, but it's there for you to take. Yes, ma'am.
Is there a disadvantage deducting the office from your home when you sell the house?
Well, like I said, every year you can take those utilities and that, but that's all you're taking. Okay, you're not taking the mortgage payments. Yep. Yes, sir.
I was just wondering, is there a cap with the new tax structures and everything for us? Is there caps on deductions or no?
Well, there's always caps on donations. Okay, so your donations, and okay, so this is a great, I don't know if it's great, but they've changed the standard deduction, okay, for all of us, all of our personal tax returns. A single filer now is $12,000 on a standard deduction. Married filing joint, you're at $24,000, or you might be at $26,600 depending on your age. But those have changed. Keep tracking all of your donations. Keep tracking your mortgage interest. Keep tracking your property taxes, regardless of which side of the $24,000 or the $12,000 or the $26,600 that you fall on, because the state did not change. Okay. You might not itemize on the federal anymore. Let's say you're married filing joint right now, and your itemization comes up to $21,000. Well, you get to take the standard now because it's higher. It's 24, so that's your benefit on the federal. But on the state, thank you. On the state, I'm going to get kicked out of here. On the state, nothing's changed, so you're going to itemize everything. Okay, and the best part about the state is that they don't have a threshold on the medical. Okay, so all of your medical expenses counts as an itemized deduction on the state form. Okay, on the federal, your threshold, depending on what your income is. So you might have some medical expenses that don't even get claimed as a deduction. from that itemization. So keep tracking everything.
So the maximum, so I guess what I'm trying to figure out, so if you're making X amount of dollars and you've taken trips and do all this stuff and everything, and your deductions are 35,000 or something like that, so it stops at 21?
No, so let me, if I answer that correctly, let me know. If I don't, correct me. So when you're talking about income from the business is coming in, right?
Yeah.
All your deductions from the business, you can have as many deductions as you want.
And the one you're just talking about
Is on the personal 1040 return for the standard deduction. That's
Oh.
personal deductions.
That doesn't affect us then?
Well, it does, but from a business standpoint, it doesn't. So from a business standpoint, you guys can have as many deductions as you want. Okay, you can show losses for 3 years as well. But after that, then if you show a loss for 4 years or longer, an auditor can come in and say, this is a hobby, we're gonna disallow all those losses, and then you're gonna have to pay all the taxes on that. So up to 3 years, I wouldn't do any more than 3 years in showing a loss on a business, whether it's your PLLC or it's an LLC, any type of business on that. I wouldn't show losses for more than 3 years. Did that answer that correctly? Okay. Okay, yes?
If you have another business, for example, I have part-time work, so how to handle the PLC with this?
Well, depending on what that business is, you might not need a PLLC. You might just need an LLC, or you can operate as a sole proprietor. You don't even have to establish an LLC. So.
I think it's good. So I'm pharmacist, I work with CVS.
Yep.
So now I have two jobs, what should I do?
Oh, well, so you're a W-2 employee with them?
Yeah.
Well, you just claim that on your 1040 tax return, and then you claim all of your real estate income and expenses on either your personal tax return, or you create a S-corp and you file it on an S-corp tax return.
So it's better to go also for PLC, right?
Say that again.
So better to go for PLC?
Mm-hmm. If you have a PLLC, you can run that on a Schedule C.
Okay.
On your 1040, or if the tax advantage is there, you can run it as an S-corp, which is a pass-through income coming in on your personal tax return. Does that answer that correctly? Okay, guys, that's it for me. Thank you very much. I will leave. I'm sorry?
I
Oh,
have
okay.
one quick question.
Yes.
On the vacations,
Mhm.
if you don't have like prior emails scheduling appointments for documentation, but you did in fact have meetings and, met with people,
Hmm?
what's the best way to track that if you don't have a prior?
There's not a
email?
best way. The auditor will come in. So if you get audited and they look at that, and it's very specific in the code, you have to pre-schedule. So any of you guys, any real estate agent, so let's say you go to Florida, you go to Orlando and you're vacationing over there, and you happen to run into somebody, and you establish this great relationship, and you guys even close business from it. You didn't pre-schedule that meeting, your tax deductions are not qualified. Because you guys can go anywhere and pass out cards and say you just met with somebody. This all has to be structured in order to take that deduction. So, awesome. Okay, thank you guys. I appreciate your time.
There was a lot of, that first one I was worried, I was like, I was not sitting here for an hour and a half to be solicited on bank accounts. I thought the same thing.
That's just like, oh my god, I felt like
You're telling us PLLC and LLCs have tax deductions. Got it. What are we gonna talk about for 2 hours? We'll spread out of it.
Did everybody get a chance to sign in?
No, I did not.
It's rotating around. Anyone have the clipboard? Steve, never mind. You still those two? Alright, yeah, probably this.
Thank you.
Alright. Take it away, Mark.
You're welcome.
Thank you.
Thank you.
Take one.
I want one too, please.
What's your name? Joe. It's a cool name. Her name looks like Anne or Maria, actually. Is your middle name Anne? No. Oh, that's good. That's even better.
Alright.
liking it.
Do the old changes.
There's handouts going around.
Thank you.
All right, I think we're gonna get started to keep your attention. How was the tax guy? Exhilarating? Good. I'm much more boring. So my name is Mark Asher. I own Southwest Wealth Strategies. We're a wealth management firm in Scottsdale, just down the street. And I've been asked to come into you to talk a little bit about planning your own financial future. Obviously, I kind of joke a lot with realtors. I say, do you remember when you used to have a normal job? Like where you worked for someone and they paid your taxes out of your paycheck and you put it into your 401k and at the end of the day everything was done. Well, that job doesn't exist anymore. As a realtor, you now own your own business. Your practice, your real estate practice is your business. So no one's gonna do any of this stuff for you. Your taxes, obviously a big thing that you have to do on your own. Just making sure everything flows correctly. And that also includes planning for a financial future. So I am a financial advisor, for lack of a better term. We're going to talk today a little bit about how you can not have to make that big giant paycheck to the IRS every April and put money in your own pocket for down the road. Okay? Does everyone know what a 401k is? I don't really want to bore everyone. Okay. So 401ks for 2019, the new limit on that is $19,000 a year. So if you worked for a normal company that paid your W-2 and put in, you could put up to $19,000 into your 401k. That would come off the top line of what you made for the year, okay? So if you made $100,000, Uncle Sam thinks you made $81,000, right? You have to pay as much in taxes. That money then grows tax deferred, and then at age 59 and a half or above, you can start taking withdrawals out of that in retirement. The idea is not to take it all at one time and pay a boatload of taxes on it. The idea is to take it and to make your living arrangements work, whatever you need monthly, coupled with Social Security and maybe other investments, and that's how you'll live in your retirement. One of the reasons you do that, you put money away now. Most of you, if you're starting to make good money, you're going to be in a higher tax bracket. You're going to pay more taxes now in your earning years than hopefully you will when you're retired. You're not going to have a job then, right? So you're going to be living off your investments, you're going to be living off your Social Security, your tax bracket should be lower. So the rule of thumb is, let's defer the taxes now for the next 10, 15, 25 years, whatever it is, and then we'll worry about taxes at the end of the day. So a regular 401k, which by the way, none of you are eligible for, is $19,000, okay? If you're over 50, they give you a $6,000, what they call a catch-up provision. So you can get to 25 grand. Then there's a regular IRA. IRA, individual retirement account, right? It's for you. There are two types of IRAs. There's a Roth IRA, and then there's a traditional. The Roth IRA is an after-tax contribution. Right now, the IRS rules just came out. You can put $6,000 a year into a Roth IRA. Not much, right? You do not get a tax break when you put into a Roth IRA. And there are income limitations on how much you can make and put into a Roth IRA. So if you make, I think the couple, like a married couple, it's like 190 grand. So if you and your spouse make $190,000 combined, Roth IRAs are done. The nice thing about Roth IRAs is it's after-tax money, right? So that money's going to grow tax deferred, and at the end of the day, when you start taking withdrawals, it's tax-free. So a lot of people like that, but a lot of people like making money. So if you make more money now in your earning years, you're cut off from a Roth IRA. Otherwise, every rich guy in the world would be doing it. They just don't allow that. So the other IRA is a traditional IRA. Traditional IRA has the same amount of money that you can put in for retirement, $6,000 a year If you have, if you're over 50, you get an extra 1,000. So 7,000. It's not that much if you really think about it. So I tell you those because those are available to you. Roth IRAs, if you're not paying taxes, Roth IRAs are great. You're under that threshold, cool. But a lot of you, I'm assuming, are going to have a tax issue at some point when it comes to realtors. I have a ton of realtor clients. I'm the financial advisor for my home group, the Lawton team, Jason Mitchell, a whole bunch of people. So I know what kind of money goes through here, and I know the type of tax bills that get paid from some of the top producers. It hurts. Our way, what we're trying to do is eliminate some of the hurt, right? Let's not give it all to the IRS. So what I'm going to talk to you about today is what's called a SEP IRA. I handed this out. I don't do a bunch of bells and whistles and PowerPoints. I'm just going to talk. I want you to listen. Yes, ma'am?
Do you have any extras of those?
I do, sorry. By the way, Kelly told me there was going to be 18 people here.
Oh, okay.
I like it. Yeah, no, cool.
18 plus.
Yeah, plus. So I didn't make quite
Quick
enough.
question, would you be covering, defined benefit pension fund by chance, or just a little bit?
We can talk a little bit about it. I can tell you some of the numbers. Do you guys need more in the back? Yeah. Can you guys just hand those two? And then ooh, that was me. Ooh, is the cap off? I knocked that one over. Sorry. Yeah, we can talk about it here. So the other thing I handed out, by the way, is just something, if you have any questions, this is kind of rapid fire, and I know there's someone coming after me. And a lot of people might not want to ask questions in front of their peers as much. So my phone and my card's on there, my phone number, cell phone, office. If you want to reach out, or if you have other questions, you can fill it out, tell me what you want to talk about, and I'll reach out to you. So I'm going to talk to you about a SEP IRA. SEP IRA, SEP stands for Simplified Employee Pension. These are for basically sole proprietors. Okay, thank you. Which is what most of you are. Who in this room has an employee that works under their LLC for real estate? Awesome. So with the SEP IRA, you can pay yourself up to $56,000 a year. Now, I know that's a big number, and I get that. But that's the most you can put in. The rules of a SEP IRA are that you can put in 25% of your gross pay into a retirement account. Make 100 grand, you can put 25 grand into a SEP IRA. That comes right off the top line. So if you made 100, take off 25, Uncle Sam thinks you make 75. You can, about rule of thumb, I wish CPA was still here, probably about a third when it comes to taxes. So if you put in 15, you're probably gonna save yourself about $5,000 on your tax bill to the IRS. So the way I kind of talk about it is taking money out of this pocket, putting it over here in this pocket, it's still yours, you're just changing the way it's taxed. Now we do add some restrictions to that money, right? Like I mentioned, once you put it into a retirement account, it's there until you're 59 and a half. This is not a glorified savings account because you will pay a 10% IRS penalty if you take out before age 59 and a half, and then you will pay taxes. So this has really got to be the mindset of I am putting this away for my retirement because I now have a job that I am my own business owner and I don't have someone doing this for me. So the SEP IRA is real nice. You can put up to 25%. The reason I asked if you have employees, if you do have employees, there's rules and I'm not going to go over them because they're boring, but they're in here, about how you have to pay them into their SEP IRA as well. But a lot of realtors, I don't know many realtors have an employee in their own LLC, right? Because I mean, you're a realtor, you do your own thing, right? Now, let's say there's a husband and wife team. I don't know if there are any, but if there are, you can both have a SEP in your business. So let's say the business is Kick Butt Realtors LLC, okay? You can then have as many SEPs in that as you want per participant. So some guys will say, hey, my wife helps, I pay her X amount, and we're gonna take 25%, put that into this SEP as well. Separately though, for her, they have to be registered differently because these are individual retirement accounts. So really the idea here is, and I know that number sounds pretty big, 25%. The idea is as you grow your business, you might not be there today, okay? Or maybe you are. Maybe you're gonna sit down with a CPA or a tax preparer in the next couple of weeks and get an eye-opening bill to the IRS. I know so many realtors, and they always tell me the first time they got that check, the check that they had to pay, and the heart attack they had, and then the panic mode they went into because they bought a boat and a new Porsche, and they don't have any of that money from all those sales they made, you know, last January, because they had a killer month and just did all these commissions. I get it. So the idea now is, let's talk about how we can prepare for the future. Maybe 2018 isn't the year we do a SEP IRA or an IRA or any type of retirement contribution. Now, the nice part about these SEP IRAs is you have until you file your taxes to retroactively put in for 2018. So this isn't something you had to have opened in 2018. We didn't miss the boat. We're good. As long as you do it before you file your taxes. There's no after the fact, right? So if you do sit down with a tax preparer and they say, hey, you're gonna pay $10,000 in taxes, $20,000 in taxes, whatever, they will probably say, do you have some funds available? Maybe we open up a retirement account and save yourself some money right now. If that happens, contact myself or financial professional if you use one, and they can get a SEP started retroactively for 2018. Maybe it's not about 18 we're worried about, but we're worried about what we're gonna do in 2019. You can open up a SEP and you can open up these SEPs for as low as a couple $100 a month. Systematically putting in, kind of giving yourself a bump up every month. And then at the end of the year, or again before the following April, you want to do a lump sum because your tax preparer says you need a little bit more, you can. So again, the thing I like about the SEP IRA, these are really kind of geared towards one-person business owners, which is a realtor, right? And it gives you the most amount of money that you can put into a retirement account. Again, the total you could put in, so let's say you made 600 grand and selling real estate, you don't get to put 25% of that into the SEP. The max is 56,000, way more than any 401k or any other, you know, type of retirement plan. Some of the defined benefits and stuff, you can put a lot into that. 56 is the number on that. Yes, sir.
So let's say we have a W-2 job and we also do real estate.
Okay.
We max out the employer's Roth 401k at 19,000 and immediately put in 6,000 on the W-2 side. Can we still do the SEP IRA? Let's say earn 224,000 and then put 25% of that in and not break any kind of rules or laws?
So that's again, I wish CPA stick around. So the CPA is going to tell you the exact rule on that, but you can put into both 100%.
Okay.
But there's a limit on the total amount that you can put in.
Combined between the two.
Combined between the two.
Okay.
But it's higher than the normal 401k.
Okay.
I want to say it's in the $30,000 to $40,000 range. Okay. You couldn't do 54. I don't think you can do 56 and 19.
Okay.
You can't do that. So you have to spread it out.
Okay.
But a lot of people do that because they have two jobs, right? A lot of realtors have two jobs. They do real estate on the side.
And then whatever you put in, it's not a dollar for dollar like deduction off your tax liability.
It's not dollar for dollar. Well, no, I'm sorry. It is. It's dollar for dollar, not off your tax bill,
right.
Off your income.
Right.
So again, you make 100, you put 25,000 in, you made 75, and then you guys would have your other deductions from costs of doing business and stuff like that. So you can get it down pretty significantly to where those bills from the IRS.
I'm just thinking the example that you used. If you owe 10 grand, can you put 10 grand into an IRA and not pay anything?
So you would owe, right, I got you. That'd be awesome. I'm gonna work on that. No, if you put in 10 grand, you're gonna get about 3,500 off your tax. So if you owe 10, now you're gonna owe 65. You're still gonna owe, but you owe less.
Yeah.
Some people say, well, I don't wanna do that. But if you have the cash, why wouldn't you?
You have the cash.
Like if you have it, I mean, that's just, I know, and I get that, trust me, I get it. But that's the premise, like, why give it to them when I can give it to myself?
Right.
And save, you know, and then get that thing growing down the road. So really, I mean, it's pretty simple. The SEPs are very easy to set up. Again, if you have an LLC, which I did there, talking about the LLCs, was that the first person? Yeah. So you have the LLC, you can open up under that. You can open up under just your name as an individual as well, and start making those contributions and really start seeing a difference. One thing I tell a lot of new realtors and just new business owners in general, you know, again, the more used to it you get, we're all used to the W-2, right? The old 401k, they just did it for us. You didn't see it, it was just gone. And that was real easy. And then at the end of the year, you're like, oh, I put 10 grand in my 401k, you didn't think about it. Here, you have to think about it. So I tell people, let's start systematically putting in, I don't care what the number is, a couple hundred, 500,000, whatever it is that you want to start putting in a month, because it is not fun to write that big check at the end of the year, right? You know, Christmas, and I'm like, oh, hey, by the way, I need 15 grand for your SEP. I become the bad guy, I don't wanna do that. So the idea is get that systematic going, let's say you did 500 a month, then that check at the end of the year is not quite as hard to write. And you can take off, it's not like you're locked in, once you start, if you have a bad couple of months and they're not gonna put it in the SEP you can turn them off, turn them on at any time. Yes, sir.
When you put that 10 grand in, would you say it's 59.5%, when you start to collect your IRA, what's the tax on that 10 grand come out? You get taxed on that, obviously.
When you take it out?
Yeah.
It would
So in
be-
other words, I put $10,000 in, and, what if you're close to, or you're, that retirement.
Are you asking for a friend?
Yeah, I'm asking. And you put that in, okay, so okay, 10 grand, yeah, I'll put that 10 grand in, so if you're not far away from that mark or whatever it may be,
I see.
when you retire, when you can actually retire, when you wanna take that out, how are you taxed on that 10 grand you put in there?
Whatever your tax rate is.
Well, at the time. Oh. And you can do that anytime to start that set.
Yeah, you could put it, I mean, now, yes.
Could be retiring, and you could be, if you hit that age in a year or something like that, you could still do that. I'm just throwing that out for a friend. I'm not doing that, I'm just telling you.
Yeah, I
Just
got
thinking
you.
it.
No, I mean, yeah, the idea with this, I mean, is really to obviously grow it and let it, I mean, if you put in 10 grand this year and the market goes up 10% and next year like, oh, I'm gonna cash out, you know you're at 11, right? I mean, not that much different than what you started with.
Right.
But yes, you could absolutely start. Now, the other rule, you don't have to touch your money. Let's say you keep doing real estate and you're like, I don't want to touch that IRA that I started in 2019. The RMD rules, which is required minimum distribution, kick in at age 70 and a half. So at age 70 and a half, the IRS is like, all right, you haven't paid any taxes on this. We want our cut. So you need to start taking what are called required minimum distributions. It's usually a few $1,000s a year, depending on the amount that's in the IRA. It's usually about 3-4% of whatever's in it. But yeah, at some point you have to start taking it out, otherwise it just never gets taxed and the government gets grumpy about that. So yeah, I mean, you know, as far as starting, you know, one later in life, you know, that's why they give you those catch-up provisions in the IRA as well. In the 401ks, they understand some people for whatever reason. Now, did anyone recently in the last couple of years come from an old regular job? Do you have 401k rollovers? Okay, so not to be salesy, but don't leave it where it's at. You should talk to a financial professional because no one's watching your money, right? They're not doing anything. If the market goes up or down, they're not going to call you. If it's at Fidelity or Voya or wherever it is, you know, they're not going to call you. So you should take control. You have that right, and you can take that 401k and roll it in to your new SEP IRA. Not a problem at all. You don't get another tax break on it. Because obviously you already got that tax break. But that's something, so now you can kind of take control of your investments from your old 401k, start fresh with your new SEP IRA, and start making those contributions. And now as a business owner, you're in charge of what you've got going on. You're not, oh, I have a 401k here and I have one over there, and I don't remember where they're at, and I don't know the totals. Again, we keep stressing, you are a business owner, and now it's time to start acting like it. Not that you're not acting like it, but when we work for someone else, it's easy. I don't have to act like a business owner. I just have to go to work and do my job. Now you're a business owner, you gotta take control. And so that's where, you know, I think really what today and a lot of the financial day is all about, when you're talking to tax people, you're talking to LLC or PLLC people that are telling you why. I think the person coming up after me is gonna tell you she does it all and has had great success with it. And that's what we really wanna see. So I'm gonna open up for some other questions, comments, concerns. One of the other things I always tell people as a business owner now, a lot of times when you work for a private company or, you know, whatever, W-2, there's probably some sort of life insurance attached. You know, if something happened to you while you're working, whatever, they're gonna send most of it to your family. My home group's not gonna pay your family anything if something happens to you. You guys all should know that. So I always tell people, look at term life insurance, very inexpensive. It's just a way to cover just in case, especially if you're the breadwinner.
So if you have a regular IRA, you get some money in there, and you you can transfer that over to a SEP IRA, is what you're saying? Or is there a certain limit amount?
Well, if you already have an IRA, yeah, you can, you don't have to, I mean, you can have a SEP and a regular IRA. It's more the 401k, or 403b, or 457.
Oh, I see, so it doesn't, I was just wondering if you turn it over, because then if you have a SEP IRA, then you're in that position where you could put that extra money in.
Sure.
You could do that. Now, is there a minimum, you gotta keep it going, so if you have a SEP IRA, you have to put it in, so once you set it up.
This isn't like a term payment, like if you commit, you say, I'm gonna do 200 a month, and then 1 month you don't do it, they don't come after you, it's.
And there's no
it's your-
advantage to take the regular one and put it in there, to turn it to a SEP? Okay.
The SEP advantage is the amount that you can put in.
Right, so you can just set up a SEP IRA separately, just in case.
Yeah,
If you wanna put money
I
in
tell
there.
people, look, and I'm gonna be honest, again, I don't know everyone's situation in the room. If you made $20,000 in commissions in 2018, probably don't worry about doing a SEP right now. Like, let's worry about getting the business where you want it. If you made 100, maybe 2, 3, well, probably gonna pay a really big tax bill in a couple weeks, and it's gonna hurt. And so, I mean, it's just common sense. If you're making the money, make sure you're doing something about it. If you're just getting started, I get it. Like, take your time, get your business where it needs to be. But again, this isn't a call to action. You gotta do it today. But if you're gonna stay in real estate and this is gonna be your career, you gotta do it at some point. And so take the knowledge. And some people, they might say, look, I'm not gonna even be close to the SEP IRA number for a while. Start an IRA. Put in $4,000, do something just to give yourself a break and get yourself used to doing it. Plus, you don't miss those earning years, right? I used to be 25. I woke up and I'm like, oh my God, I'm 25. That's crazy. So, this is died though. I die this way. And so, people always, oh, I'll worry about that next year. Next year you're 50, right? All of a sudden you're like, oh crap, I haven't done anything, and I should have, because I was making good money, and maybe I should have gone on a trip. So you have to balance it. It's your life and how you want to succeed. I just know I don't want to work at Walmart someday down the road. Nothing wrong with that, but I just don't want to do it. I'd like to retire. Yes.
The SEP IRA is only for self-employees, or can regular someone that has a job, W-2, can open a SEP?
Right. So the SEP, again, like to answer his question, he has a W-2. That's fine. He has a real job, normal job. Then he has his real estate. Do you have an LLC for your real estate?
Yeah,
Okay.
PLC.
PLC. Okay.
Yeah.
So he has a PLC. Under his PLC, he's the only employee, right?
Mm-hmm.
Right. So that's where you would do the SEP IRA.
No,
Does that? Am I
You
not
can do it
answering?
if you're
No.
only W-2.
If you're only W-2, you cannot do a SEP.
you can.
Nope.
I want my question.
Nope. Are you W-2?
No, my husband.
Okay. So your husband, at his W-2 job, do they have a 401k? Okay.
No.
So then you would have to just do an IRA, which you can do, and he can contribute to that, again, up to $6,000 if he's above 57,000.
Unless he was an employee of hers, he'd have to be licensed.
Yeah, you can't just, well,
Can he
let's not do
contribute
that.
towards?
I mean, you could have assistants
Well,
and,
okay.
yeah, marketing coordinators.
Yeah.
Yes, sir.
Do you happen to know the limits on defined benefit?
Yeah, I wanna say it's 56, hold on. I carry this with me, it's my cheat sheet. They keep changing this thing every year. Defined contribution, I'm sorry, defined contribution's 56. The defined benefit plan max is 225.
In a given year.
Yeah, that's gone up significantly. What else? Let me see, 401k is 19. A simple IRA, which I didn't talk to you guys about, it's another option as well. A simple, you can put up to $13,000 a year in a simple. It works a little different than the SEP. You can get away with the simple sometimes a little better if there are other employees as opposed to the SEP, but don't worry about that, because again, 95% of you are never gonna have an employee that you pay under your LLC on the payroll. Let me just answer though, if you ever did, if you're the 5% that does, and let's say you pay that person $40,000 to be your admin, run the books, whatever it is, and you put 10% of your salary into your SEP, you would then have to put 10% in for that employee, 10% of what they make. Okay, so if they make 40, you put in $4,000 for the year, but you get to write that off. So some business owners are like, yeah, cool. I mean, that's what 401ks do. Anytime you had a regular job, that company you had wrote off all those contributions. They do it for a tax break on a much bigger level than what we're talking about. So it's not the end of the world. If you have 10 employees, you might not want to do a SIP. Or if you're putting in 25% of your salary, now all of a sudden you have to give them 25% of their salary. That gets a little pricey. So, any other questions? I told you I was more boring than this. Anyway, so yeah, there's a form there. If you have any questions, you want to go over your individual situation. If you have questions on those old 401ks, I can give you advice, help you out. If you want to start a SEP, I'd be happy to help anyone in the room. Just so everyone knows, there's no fee or charge to meet with me. It's free. So. All right. Yes, sir.
You on your form there's a major medical. So do you provide information if someone wants to buy medical insurance?
I can help in that. So it's kind of weird. I probably should update that and eliminate that. But yes, I can. Individual, like you usually want to go get health insurance. It's a little harder for me to do now. I can point you in the right direction. I do group benefits if necessary. So if there's a group, I can do it. That's like that much of my business, but I can do it. Cool. I do, just so everyone, my focus is fee-based asset management for families and businesses. So I run a lot of 401ks in town for different companies. And then I have a lot of obviously families and individuals. And then one thing I always incorporate into my clients' portfolios is life insurance on a term basis, just to cover that what if. I call it I use a cheesy analogy, but if I had a client once and she told me that she made $400,000 out of nowhere. I didn't know it. She was a friend of mine when I came. And so she made $400,000 a year and she didn't have any life insurance. And I said, wow. I said, hey, let me give you a scenario. I said, if I put a machine in your garage and every year you go out and hit the button, 400,000 to spit out. That's pretty cool, right? And she's like, yeah. I'm like, okay, well, hold on. I'm gonna charge you like $75, $100 to make sure that a month that button keeps getting pressed and the money keeps coming. You pay for that insurance on the machine? Hell yeah. You're the machine. You go to work every year, you make $400,000. If that machine breaks or dies, no more money, right? So let's put in a life insurance policy that covers the what if. So your kids, and your spouse, and people around you, can not have to completely change their world. So it's a super cheesy analogy, but it kind of makes sense for me. It's effective, right? Because we would all insure that machine, but then people are like, I don't have to go through the test. It's minimal, it's easy, and it's pretty inexpensive on the term side. You'll hear of whole life and some of these other cash value policies. I'm not a big believer.
What's the difference, life insurance, term life? How, I mean,
life insurance term's not
Okay, cool. This is good. I like it. So, 5 minutes. It's just getting good.
Little bad action going on there.
She did that. So real quick. So term is for the term. I usually go 20 years. Okay. So I'm 44 years old. 20 years. I'm insured until age 64. Now, what I like about the policies I do, they have what are called conversion capabilities. So at any point in that 20 years, so let's say I'm 44, I go in, I'm in good shape, I'm healthy, no medical issues, and I get preferred or preferred elite, the best ratings out there. And my insurance is going to cost me for $1 million policy, $100 a month, 110, whatever it is. I'm locked in. I'm going to pay that every month. If something happens to me, my family's going to get $1 million, tax free. Okay. Let's fast forward 19 years. I decided to start smoking. I'm fat. Or I had a heart attack, right? Cancer, like all the worst things you could possibly think of. Guess what I'm not getting at age 63, 64? A new life insurance policy, because they won't insure me. But because of this 20-year term with the conversion capability, I can get a permanent policy, which means it will pay the day I die, whether it's 65 or 95. It's going to be more expensive than the term, but you have that capability. So you can get the insurance now, pay a lot less, and worry about the permanent insurance down the road. The reason I say that, the term, they think, on average, 3% of term policies get paid out. 3%. So AXA or Prudential or any of these insurance companies, John Hancock, they're like, yeah, we'll take $100. Take your 100, your 60, your 40, yeah, okay, we're making money. Oh, someone died. Okay, we'll pay that one off. But they're not, people live longer. The, you know, tables are saying that we're all living longer and healthier, and there's medicine, technology. So they'll take those term policies. Now, on the flip side, a variable universal life policy or a whole life policy, those are until you die. So the cost of insurance is way more. You gotta pay more, because they know someday they are paying that.
So does not everyone have that conversion capability?
Not all insurance companies, but a lot of them do. I use AXA a lot, but there's a good handful, and I can shop the network. So it's just my philosophy. Here's the thing with the cash value policies. They get sold as like a retirement sleeve. You're gonna put all this money in here and have all this money tax-free when you retire. Sounds great. What they forget to tell you is that the cost of insurance every year keeps going up. The older you get, the more the insurance costs. So it starts eating away at what you're putting in. So I have one client who puts a ton of money a month into his variable life policy, like $5 grand. So he's putting 60 grand a year into this thing. That one works. 60 grand, 60 grand, 60 grand. I mean, you can do the math. It's gonna be fine. But I have people that sell these and they're like, oh, I'm putting $200 a month into my cash value life policy. I'm like, why? It's just a waste. Like, it's not gonna grow. When you get to the end of the day, your cash value is gonna be a few $1,000s, and it's not gonna be worth it. So what happens a lot of times is those people get to that point. I know I have too many. The people get to that point, and then they were sold something, and now they're 65 and they want to use that for retirement. It's not there. So, and another thing they do is they'll sell it and they'll say, yeah, we're going to get you 10% a year in the stock market, because those investments are in, that cash value was in the market. So they'll say, we'll get you 10%. No, they're not. They're not going to give you 10%, because the history of the S&P 500 is 7.5. So I'm gonna out.
I'm not here.
You can dance back and forth all you want. Anyway, so does that make sense? That's just my thing with term. It's cheaper. You are covered. Life insurance is the machine breaks. That's the only thing I look at life insurance for. It's just a what if, disaster, something happens, your family's cool for at least a little while. And a lot of times what I'll ask people, and I'll leave you with this, you know, a man or a woman, if one of them is the breadwinner, okay, dad makes 200 grand, mom stays home and raises the kids, right? Which is not that far off. Well, if dad dies, mom's gotta go to work. So how long do you want to recreate your salary? Do you want to do it for 2 years, 5, 10? That's how much you need in life insurance. How much is your house? What do you owe? 250? Okay, we're gonna pay off the house first things first. So you owe 250,000. Boom, we're gonna take 250 from life insurance. No house payment. Now, wife or husband doesn't have to worry about that. And I do this all the time. I have guys come in, they make all the money. Wife stays home. I say, do you have life insurance on her? No, she stays home with the kids. Oh, really? So let me ask, if something happens to her, who's gonna watch your kids? You can't go make all your money at work, because now you gotta be Mr. Dad and all this other, and they go, oh, I never thought of it that way. So I always make sure both sides, plus you don't wanna sleep with one eye open, both sides are covered. Cool? I'm pretty blunt, sorry.
One joke worked, that's all right.
Yes, ma'am.
Is that taxable when you take it out then? Does it say, my husband dies, he's got life insurance? And then
It's not, it's tax-free to you. Typically, what happens is you literally get a check sent to you, like, quickly. So, you know, whatever that death benefit is. Some take longer than others. Some companies want death, like, certificate, and, you know, proof.
My uncle used
Can't
to
be
give
suicide.
those checks.
Huh?
My uncle used to be the guy that gives the checks.
Yeah.
And he says that it's the saddest thing is they lost somebody, but it's the most reassuring thing because he knows whatever they plan, they can plan for it.
Plan.
Yeah.
I will leave you this. I have a client, I've been given permission to use this example, we won't say the name, but a big mortgage guy in town. rock and rolling, making boatloads of money, had $1 million life insurance policy, decided his premium, he was a little bigger guy, his premium wasn't this size, too expensive. So without telling me, went and got two, you ever heard the commercials, like, if you're a male 52, you can get term life for $12 a month on the radio? Yeah, those are bullshit. Okay, because those are fly-by-night those are fly-by-night companies. So what happened? My friend did that in January, and in April, died of a massive heart attack. Okay, 54 years old. The insurance company said, pre-existing condition, he lied on the life insurance policy. Now, the major companies won't do that. These fly-by-night jokers did it. So his wife went from having a husband who made $400,000 a year. She, by the way, made 32 working in the office just to keep him company. To now, no more 400,000. Oh, and by the way, the life insurance didn't pay out. It's not worth it. You know, $50, $70, $80, whatever it is a month, just have something so your family doesn't have to go through it. All right, I'm gonna get yelled at really bad. So I appreciate your guys' time. Honestly, if I'm gonna go, so if you want those, if you want to fill it out, you want me to call you, fill out. I don't really need all that stuff circled. If you want me to call you, put your name and your phone number or an email address and hand it to Kelly, and I'll come back later this week and pick them up, and I'll be in contact. Okay? I appreciate your time. Thank you.
Thank you.
Thank you, Mark.
Yeah.
Anyone else still need to sign in?
Do you have anyone? Perfect. Do you have anyone that relies on your financial? No. Do you have a charity that you love?
Let's make this thing go back. See, I forget what I'm going to talk about unless I have something sort of to cue me. But I'm excited to talk to you guys today. Is everybody good? Does everybody have a drink of water? You've been in here a long time. Anyone need to pee? The bathroom code is 222. Everyone's good? Okay, good. I am really excited because we're going to be talking about something that is one of my favorite topics in real estate. Favorite of all time. And before we do that, I wanted to let you guys all know that I am part of my home group up in Prescott. So if you have any Prescott referrals, I would love to have them. I have also brought sugar because I think it's incredibly important at this stage in the game to have a little pick-me-up. So do you want to pass this around? And do you want to pass this one around? And everyone can just kind of grab one. And then we can eat and chat. And lunch is coming. So it's going to be good. So why is this one of my favorite topics really in the real estate world, right? Like too often as agents, we attribute our success in a way that's a misattribution, right? Like we feel like, oh, I have a good amount of escrows, I'm gonna make great money this month, so I must be crushing it, I must be doing the right things. But really, escrows are a very lagging indicator on how well we really did, right? We don't totally know how to predict as agents whether next month's going to be a great month or whether next month we need to be bracing for impact. And I think that's a really tough thing. What do you think? Oh, you okay?
Hey, don't actually got hurt.
One of the things that I think is really important in this business is we come up in our business with a series of key performance indicators that we can say, yes, I have done the activities that are going to create success in my life tomorrow, right? Like one of the things that I'm really passionate about is how can we create a life that has ongoing success? Too often as agents, I see people on a revenue roller coaster, right? So amazing month this month, they get super busy, they don't do what it takes to have an amazing month next month, so next month they starve. And then because of that, because they're starving, they go do a ton of lead generation, and then the next month it actually is a pretty decent month. But they're busy closing those deals, moving and shaking, and then the next month, because of that, they starve again. right? And we signed up for this level of roller coaster, right? But our family and our children didn't. And ultimately, your son is going to want soccer shoes regardless of whether or not you lead generated last month. So I think it's really important to figure out a way within our businesses that we can really stabilize this and have a business that's very stable from month to month to month. So let's imagine that you're about to embark on an epic climb, somewhere really magnificent. What advanced planning would you need in order to make the climb a success? You can talk, I'm really nice.
We're trying to get these bags.
My assistant does this every time. They're like a little Rubik's Cube. So, okay, so here's what I think you need. I think you need a map. I think you need provisions, gear. I think you need a good guide. And I think we need benchmarks along the trail, right? That's what I think we need in order to have a really successful climb. So first of all, let's talk about a map. I think a map would be your business plan for the year. Who has a really good business plan that they love? Yes!
She does.
She does. Alright, so in that case, I'm going to share mine. And we're just going to kind of talk through it. Because one of the things that I think is incredibly helpful in figuring out where you want to go is to know in granular detail what that landscape looks like. So I was trained in the KW world, and that's a bit provocative to say here, but I was trained in the KW world, and one of the ways that they prepare a business plan is something called a 1-3-5. So one objective, 3 initiatives within that objective, and then 5 action items within each initiative. And what I recommend when people are running a business plan is to figure out what they want their business to do precisely. So for instance, you can look at ours and you can see that our 2019 goal is 200 deals and 15 agents on the team, right? So 200 deals is the goal, and then the breakout really goes into 3 parts. How many buyer deals am I gonna do? How many seller deals am I gonna do? And on my 1-3-5, the other piece is the who. But this is applicable to any business, right? Because any person can sit down today and they can say, how many buyer deals do I want to do? How many seller deals do I want to do? And then the third piece might be, what personal goal do I want to accomplish? What thing did I really hope for? What could I crush in 2019 that would be deeply meaningful to me? The third thing could also be scripts. What script practice am I going to do? What events am I going to attend? How am I going to grow? It could be personal growth in general, right? How am I going to be materially different at the end of 2019 than at the very beginning of it? So this business plan can take shape with the third aspect in any way that we want. But what's important is to have a plan that outlines in granular detail how we're going to do it. So you can see as you walk through mine, first I talk about headcount, and I have the initiatives laid out on how we're actually going to achieve that headcount. Then as you walk through the listings, I talk about exactly how we're getting our listings. So for instance, on my team, 47 of those are going to come from the dialer, meaning outbound calls. I'm a really heavy outbound call person, and I love being that activity because I can track it really well, right? I'm in the total driver's seat. It's the only activity that I know of that I can wake up this morning and be like, eee, I'm feeling a little light, and tonight have totally changed my workflow, right? in the hours between 8 a.m. and 5 p.m., I can change the landscape of my life. I love it because I'm in the driver's seat. 60 of those deals are coming from wholesale leads, so I actually own 2 businesses, a retail business and a wholesale business. Not everybody wants to sell their houses at a discount, surprise, surprise. So for anybody who doesn't want to sell their house at a discount, our wholesale team is actually trained to say, I totally understand that is a low offer. Let me hook you up with an agent who can help you net the very most money possible. So we're getting moved that way. Agent to agent referrals. That's just this, you guys. Chatting, saying hi, saying, hey, I live in Prescott. If you have any Prescott deals, please send them to me. That's it, right? And then you can see on the back what the sources of our buyer leads are. So what I thought would be fun today was to build out a map for one of you. Who wants to be my guinea pig? Who are we going to run the 1 through 5? Okay, yes, ma'am. What's your name?
Patty Ernest.
Patty Ernest. Let's run a business plan for you. Where's the eraser? Do we know?
Your hand, yeah.
Awesome.
Exactly.
Okay. I've known I was reaching out, I wouldn't have worn such a short dress. All right, Patty.
I don't think we're just gonna come to this.
How many deals are you hoping to do in 2019?
As many as possible.
And numerically, what would that look like?
I don't know.
Is this your first year in real estate?
It is. I just started in September and I just joined here in late December.
Congratulations! We're excited to have you.
I am a little lost.
Fabulous. All right, good. I'm really excited to do this for you then. All right, do you have a specific income goal in mind? 100. All right, I love it. All right. So what I found, an average commission is $6,000 here. $6,000. This is not an amazing marker. Okay. So if you want to make $100,000, and we know that average commission is $6,000, that means you're gonna have to do 17 deals. So to me, that probably looks like a deal and a half a month, right? But since we can't do a deal and a half a month, we'll just do 2, and we'll say, yeah, some are gonna fall out of escrow. Okay, so now if we know that you want to do $100,000, that average commissions are $6,000, and that you're going to have to do about 2 deals a month in order to make that happen, we can project that we're going to want you to do about 24 deals in order to be comfortable. So do you have a feeling on whether you'd rather have those be buyer deals or seller deals?
Combination.
Okay, so half and half, or?
Okay.
Okay. Okay, so that looks like 12 buyer deals, 12 seller deals, right?
Right.
So now we just have to figure out, where do we want these deals to come from? So on the buyer side, where people typically get leads are open house, sign calls off their listings, agent to agent referrals, help me out guys. Cold calling, Zillow, door knocking rentals, friends and family referral, center of influence. Does anyone have anything else? Have you put any thought into what of those sound appealing?
I just got through with the UX training. So my response to that will be open houses.
Okay. one more just for fun. I'm gonna give you agent to agent because this is one of the ones that we don't talk about that much that I think is easy low-hanging fruit. All right, open house. So how many of your 12 buyers are you projecting in your business plan or hoping would come from open house specifically?
12.
12? All 12.
Why not?
All right, I love it. And how many open houses have you held up until this point?
4.
Okay, and on average, when you hold an open house, how many buyers walk through?
With or without agents?
Without, that would actually be a lead for you.
1.
Okay. And who in the room can give us a really good conversion number on how many leads we would need to talk to at an open house in order to have a sale?
60.
30?
1 in 33 is.
1 in 33 is a good open house number? Okay.
Doesn't it depend on how good you are?
Yeah.
Well, that too.
Yeah.
You know what's interesting? This is an amazing question. Who asked that? Was that you? This is an amazing question. I used to think yes. I used to think that how good you are plays an enormous role. And it sort of does. But what is actually more impactful, you guys, and this is one of the things that when you learn it, it changes your life. When you become amazing at scripts, your conversion rate goes up like 1%. So that's a good amount, right? So if I talk to 100 people, instead of 3 leads, I would get 4 leads because I'm a little more skilled. It's impactful, right? And over time, we can't negate that. But we also can't negate that if I talk to 100 people with almost no skill set, I would get 3 leads. That's amazing. And I think sometimes we overplay the talent factor, right? We go, oh, I have to have a lot of experience or a lot of talent or my conversion has to be really good. And what is actually true is that when I understand the metrics that drive my business, I understand what activities that I need to do to create success. So yeah, if I'm better, I get 1 additional lead out of a group of 100, but you know, if you do 100 deals and I do 99, I'm still not sad about that 99. So anyway, but that is an amazing question. So, but what I love is a lot of this can be broken down statistically. So if we know that it takes 33 contacts to get a closed deal in real estate, and that you want to get 12 buyers out of your open houses, and you're getting 1 good lead per open house, then what is 33 times 12?
396.
I think we need a new lead generation strategy. All right. So, how many open houses do you want to hold?
At least 1 every weekend.
Okay, so how many weeks are in the year 52? All right. So if you hold 52 open houses, and we need 33 leads, yeah, you're gonna get 2 sales out of that.
That's about right.
This is why I love this, by the way, right? Like sometimes we go, wow, it just looks like I need something else. And that's okay. That's why we want a roadmap. Because when we really figure out what the activities that we're doing are creating, we can go, okay, that's cool. I'll hold 1 every week. That'll get me 2. Now I have to figure out what else that I want to do will create success. So let's talk about cold calling. Tell me about that, and tell me about what you were thinking for getting buyers on the cold calling front.
The truth,
Mm-hmm.
I gave up because every time that I called somebody just about,
Mm-hmm.
I couldn't get through to somebody. And if I did, it was, I already have an agent working with me, or something along that line.
Who were you calling?
Visbos, expired, thank you, yeah.
Okay, so you were calling FSBOs, expired, so you're mostly calling on seller data, it sounds like.
Yes.
Okay, so if we were gonna come up with a strategy that would work phenomenally for buyer data, does anyone have any ideas on who we call for that?
Lenders.
Lenders? Renters? That's a great idea. Renters is an amazing idea. Lenders actually isn't the worst idea either. Sometimes we assume that everybody has a referral partner, right? Sometimes we assume that everybody is taken. But a lot of people, more than you know, are an orphan. They don't have anybody.
Has not been my experience.
Okay, so have you tried something really creative? Like, have you tried calling lenders in Tucson? And been like, hey, it's just my experience that sometimes people get pre-qualified down here when they're planning on moving up here. If you have anyone in the Phoenix area, I would love to be the first person to talk to them. Or maybe Sedona. Or I can tell you Prescott, what happens in Prescott is people move up to retire, and then 10, 20 years later, they find they want to be close to their family again. So they get pre-qualified up here, and then they move down to Phoenix. So if you're cold calling, what I'd love to see you cold calling, I'd love to see you cold calling Prescott agents, Sedona agents, Prescott lenders, Sedona lenders. It is very important when we're thinking about agent-to-agent referral, or any professional referral at all, that we think about what would be a complementary market for us or a complementary partner for us. So if you're cold calling and you're cold calling for buyers, let's do it for you in a really strategic way. So typically, NAR stats say that every time I make a cold call, when I make 100 contacts, 3 of them turn into leads, and 3 of them turn into appointments. So that's a total of 6, guys, just if we're, so 3 leads, 3 now appointments. So I could call renter data, especially if I know that their lease started a year ago, or 10 months ago. That's an amazing time to be calling them and saying, hey, I know your lease is about to expire. You know, when would you be looking to purchase a house? And I bet if you cold called enough property managers, you'd find somebody who would share lists in exchange for referrals. It's a real small world. You're gonna get a ton of no's for sure. But all you need is one yes. And then you have an amazing renter list, right? Who else? Who else would be a great buyer list to call?
Tax people.
SOI.
Tax people? You mean like accountants?
Accountants.
Oh my gosh, they're amazing! Especially this time of year, right? So tax people are amazing because they can give you real referrals. Who else?
Divorce attorneys.
Divorce attorney, amazing! Amazing! Who knows someone's gonna move before the divorce attorney? Sometimes the divorce attorney knows before other people's spouse, right? I mean, it's an amazing list.
I would just like to throw this out there.
Mm-hmm.
So these people that are lists to me, what are they getting back for it?
Great question. Property manager referrals. They get a relationship with you. So the script from my perspective goes, ring, ring. Hey, this is Isabel Stonebreaker. I'm with my home group. We sell about 100 houses a year. We have found that many of our investor clients are looking for an amazing property manager. And I'd love to be able to refer you. What I'd like in return would be if you had people, buyer-wise, that you knew were planning on making a move, I'd love you to share their contact information with me. It's just reciprocity, right? So always start off with what you're offering. Never make an ask before you've offered something in return. But part of our job is thinking strategically about who we would even want to talk to, right? So the other buyer list that I love people cold calling, how about buyers who have purchased multiple properties for cash in the greater Phoenix area? You know you can find that in the tax records, right? So I think that's a really powerful one. If I know that John down the street has purchased 2 or 3 properties for cash, how likely is it that he would buy another one if it was a great deal?
Likely.
Likely, at least more likely than Joe Schmo down the street, right? So part of this is being a little strategic about it. If I'm going specifically for buyers in terms of cold calling, I need to find a list that's going to be a powerful list for me. Because what isn't totally fun is calling the same list that everybody's called, that's really tapped out, that's super tired. It's really a tough slog, you guys. But finding a great list of people who are excited about you, super powerful.
And we're getting that list from where?
So you can find it in the tax records. So if you go into Monsoon, you can pull a list of people who have purchased a property for cash. And then you're going to have to find a way to scrub it. You're going to have to find people whose names have come up multiple times. But if you do, you now have a powerful list. And when I'm pulling this info, I'm running it through Vulcan. So I'm just going right over to Vulcan. Does everyone know what Vulcan is?
What is Vulcan?
So Vulcan is a dialer that also pulls seller info. And I'll actually give them lists of people I want to call. They'll scrub it, send it back to me with their phone numbers.
Can I just go back to something for half a minute, please?
Sure,
I know
of course.
For purposes of time, now, when you said, because I do have a property manager.
Okay.
How
He
about-
manages your properties now?
He does. Well, my
Amazing.
partner, yes.
Okay, good. So
My
you have a
partner.
really powerful existing long-term relationship.
How do I approach him again? Ask him about investment if he wants to work with an investor?
So I just say, hey, I'm really thankful for our relationship. You know, I've been a client of yours for years. I've really enjoyed working with you. I think you know that I went into real estate and that if I have investor clients, I'm definitely going to refer them to you. What I'm wondering is if you can help me out a little bit. I'm looking for buyers that are ready now. If you know of anybody who's at the end of their lease and you know they're not referring or renewing, would you mind passing along their information to me so that I can give them a call? There's nothing unethical about that at all, right? So my husband and I own several rental properties. We're raising rents on all our properties. Ultimately, some of our renters are going to move on. If our landlord gave out that info to a realtor, it would be fine with me.
But if the property manager is licensed, wouldn't they want to make their own deal?
Some will, but some it's not their business model. I mean, they could have the same argument about us, right? If the realtor is licensed, wouldn't they want to manage properties? And if you ask me if I want to manage properties, the answer is no. So also, when she calls, she's going to get no's. She's probably not from this guy because they have a long-standing relationship, but when she starts cold calling people, for sure she'll get no's. But ultimately, the way that I look at this is there are a certain number of no's that keep me from my dreams, right? So if I want to take my little son on a Hawaiian vacation this year, I've just got to get a certain number of no's in order to do that. Because I know that statistically, those no's are going to lead to a yes. And if I know in granular detail what my business plan is, what I want to make, what I want to provide for my family, the life I want to have for them, then I don't care about no's. What I care about is getting to the finish line so that I can provide for my family the things that I hope to provide for them, right? So, no, you'll get no's, but we're excited about that.
I can handle a no better than I can handle a
well, and
no, you ring and nobody answers.
Let's get you on a more strategic list.
Please.
I think that's going to be really helpful to you. If I'm you, I'm cold calling property managers, and I would just Google them. I would spend a day like Googling them and going down the list. Then I'm going to pull a cash buyer list, I'm gonna run it through Vulcan, and I'm gonna get phone numbers on that. And then, what else would be good cash buyers? I'd probably start calling lenders that are out of area. They're probably orphans from Phoenix. They're probably not orphans for their areas, but they're probably orphans from Phoenix. So that's who I call. All right, how many deals are we getting from cold calling?
6.
6. All right. So if 6 of my deals are coming from cold calling, and it takes me, yep, and then 3 leads usually turns into 1 closed deal. Then I need 18 leads, 18 times 100, 1,800, right? Divided by 52. Oh, you guys, it's such a low number. I need only 35 contacts a week to do this. Does everyone understand what I did there?
No.
Okay, so that's what I was afraid of. All right, so here's what I figured out. I want 6 closed deals, right? In order to get 6 closed deals, if I know that it takes me 3 leads to get a closed deal on the dialer, I need to have 18 leads.
3 times 6.
So 3 times 6, 18.
What's the 100 contacts?
So 100 contacts is, hi, is this Isabel? Hi, is this John? Once they've said yes, that's a contact. Whether they say, yes, I want to work with you, no, I do not, tell me more about your business, never call me again, whatever. Once they've said, hi, is this Isabel? And I say yes, that's a contact. So if I know I need 18 leads and 3 leads come from 100 contacts, I need 1,800 contacts in order to get my 6 deals.
Or 35 a week.
Or 35 a week. So 1,800 divided by 52 weeks a year gives me 35 contacts a week. If I work 5 days a week, I only have to call 7 people a day, you guys.
Huh?
You have to make 7 yeses.
So Patty, can you?
You have to connect with 7 people.
So yeah, I have to. Yep, you have to get. Hi, is this Isabel? Yes. But win, lose, or fail, it counts. So Patty, can you commit to calling 7 property managers, or 7 cash buyers, or 7 lenders in Tucson each
Yes,
day?
I have to make contact.
Yeah, it's actually.
Call.
You have to have a yes. So it's got to be. It's not just calls. It's contacts.
But
So
those
if-
people all answer though.
Yeah.
Because it's their business, that's what they're gonna
Yeah,
answer.
if I leave a voicemail, it doesn't count.
Seven
If I get a
yes.
wrong number, it
No.
doesn't count. If I shoot you an email, it doesn't count. I've got to have a voice-to-voice contact with you.
I can tell you though, that I've gotten so frustrated. John During, through the brokers, has a mojo system.
Uh-huh.
I've gotten so frustrated through this whole process that I don't even wanna participate in, I need to get
All right,
that
we're gonna
right.
fix that. We're gonna fix
Please,
that because it sounds like we have maybe a little bit of an issue with his phone numbers and a little bit of an issue with respect to your mindset because we have to go in knowing we're gonna win, right? Like for whatever reason, I dial every day. My team dials every day. And there's something that I found. I don't know if it's magic, I don't know if it's woo, I don't know what it is, you guys. But if I come in being like, it's a great day, I love dialing, we're gonna win, we win. If I come in and I'm like, oh, it sucks, I hate the dialer, we don't get a lead. So you have to come in, they have to hear you smiling. So you have to, like when you go in, you gotta stand up, you gotta play your walk-up song. Does everyone know what a walk-up song is?
No.
A song that makes you pump. A song that makes you feel alive. So like every once in a while in my team, if we're having a bad day, we pause the dialers, we put on a good song, and we literally jump around. Like your energy has to be good. I'm a big energy person, it matters. Like, it matters if you come in saying, I'm gonna win this, you win. If you come in going, I'm gonna try it because Isabel says I have to, it probably won't work, that's the conclusion that you're gonna end up with. Alright, so, but 35 contacts a week, the reason that I love doing this is it's super powerful. When I break down how many contacts do I actually have to make per week, if you're calling good leads, so if you're doing this in a really targeted way, if you start off with lenders or property managers or something like that, you can talk to 7 of these people in an hour. And you're probably not going to get that many bad numbers, right? So 1 hour out of your day, can you give me that for 6 deals? All right, I love it. Okay, let's move on. Database. How many deals are we hoping to get from the database?
12, 8, and 4.
4? Okay. 4, 1 a quarter. Awesome. And how many leads do we normally need from our database in order to have a closed deal? Pardon? 50 leads?
So from your database.
Okay, so we're saying contacts in the database, we would need 50 in order to have 4 closed deals. Okay. Well, everybody's database is different. How they run their database is different. But the key is to have a really good database strategy. So if you're running a database-based strategy, the way to do it is I would sit down and I would come up with a list of everybody that I know, right? So who's my hairdresser? Who's my best friend? Who's my son's teacher? Who, if I called them and said, hi, is this Isabel? Or this is Isabel, they would know who I was. Then out of that, I would find the 10 people that I thought would be very, very likely to give me business, right? So, for instance, there's a gal on my team who has in her sphere somebody who has 7 siblings on the husband side and 7 siblings on the wife's side, 14 total siblings, and they have chosen this gal on my team to watch their children if they die. That person would be in their top 10, right? Because if there's real estate to be done, she is referring that business to the gal on my team. So you have to go through the list of everybody on 100, or everybody that you want about 100, and of the 100, you're gonna figure out who are my top 10. Who are the people who are going to help me win the biggest? Everybody in your top 100 that we're gonna set up on a BombBomb video or some type of newsletter that goes out to all of them. I personally use BombBomb because it's so cheap, you guys. It's easy to use. And I have found there is a better connection rate when I have a 1-to-1 contact, right? BombBomb is a video, so it feels more like a 1-to-1 contact if I'm sending a video to you. And I'm just gonna send it on real estate. So I've sent out BombBomb videos on why a team approach is better, because I run a team. I've sent BombBomb videos out on thinking of selling, what repairs could you do that would bring you the most value. But they're literally just me talking. They look a little wonky. Everyone hates seeing themselves talk, right? But they exist, and they don't bankrupt my company when I send them out, right? You don't want to do something that's so expensive or so hard that you won't do it. And literally, I will record every single BombBomb video for the year in a single afternoon, changing clothes. So I'll record boom, 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 boom. Then I'll schedule them to go out every 2 weeks. On something like that, you want it to be no more than 10 days apart. If it's longer than 10 days apart, people forget you. That is how appallingly short our memories are now. So every 10 days, you want them to be getting a value add video. And when they look at this video, you will get a report.
Only if you email it. If you text, it doesn't work.
Okay, so we've got to email it, but everybody who looks at the email, we're going to get a list, and then we're gonna call through that list. What do you guys guess the conversion rate is on calling through that list? I'll give you a hint.
100%, I guess.
Super close to the NAR contact numbers.
You're calling them every 2 weeks?
No, I'm calling only people who open the email. So what's your name?
Nancy?
Nancy. So I'd be like, hey Nancy, I saw that you had opened my email on how to stage a house. Just curious if you had any questions on that. Are you thinking of staging? Are you thinking of moving? What's going on with you? Right? Like, it's a very natural conversation. And what's cool is, if they just delete it, I'm not wasting my time. I'm not calling anyone who didn't open the email. So some of them are gonna be like, my mom, just like seeing my face, right? But some of them, you're gonna be like, there's really no reason for them to open this unless they legitimately are thinking of staging a house. It's a tip off. And it's a way that everybody that I know is now tipping me off inadvertently. Does that make sense? Does anyone have any questions on that? Yes?
What happens if you don't know 100 people?
If you don't know 100 people, make a list of the people you do know. What?
Finding the content is the challenge. Finding content.
So, okay, this I would agree with. The key is to do it all in a single afternoon. What's funny is if I tried to think of 50 topics right in a row, I would really struggle with it. But once you start talking about things, you just get on a roll. Like, you start talking about staging a house, and then the next one, you intuitively think, in the next one I should talk about what repairs I should make. And then in the next one, you talk about the most frequently asked buyer questions, the most frequently asked seller questions. You just move into it. But the key is to do it back to back to back to back. A, you get more comfortable on the camera over time, so it's less painful. B, you've blocked all the work into one thing, so now you've spent maybe 2 hours, but you've set up a system that's gonna last the entire year. And C, action facilitates action. You just start going, oh yeah, sellers do ask me this. Oh yeah, this is a common appraisal issue that comes up. Oh yeah, let me tell you about this investment strategy I've got. Everybody seems to think it's interesting when I talk about it, so I'm just gonna make a video, right?
What about for past clients you kind of lost touch with the database and stuff like that for the bomb bar? I'm just wondering, like, do you ever get like personal type of thing, like, hey, haven't seen you for a while, whatever, just a quick, because a lot of times when you call people, you haven't talked to them in a while or whatever, like you said, people forget or whatever, they don't pick up the phone. But I'm just thinking, if you do something like that, it might, they may answer the phone when you call because, sometimes they haven't seen you, does this person want to call back? Have you ever tried that? Does that work?
Yes, so everything works. That's the amazing thing about this business, right? Everything works, literally everything. And for the people who are going, I just want to know where to start with a past client, or maybe I don't have a past client, I think it's glorious if you want to call them and say, hey, I'm just thinking about you. How are you? Tell me about your property. How did it work out? I think that's amazing, and what you're going to find is your referrals are going to really follow the NAR statistics. It's going to be a warmer call. They're going to be nicer to you. But if you've just got a list of 100 people, and some of them you wouldn't necessarily think to call, it is totally fine to just put them in a bomb. So if you're putting this together, you've got 100 people, or you don't, but you just kind of want to add, you can go into Facebook. I can't remember the way to do this, but if you Google it, you'll find it instantly. You can actually download the email addresses of all your Facebook friends, and you can add that to your list. That should quadruple your list very easily. You can download the list of anyone who's ever emailed you from Gmail. You can add that to your list. So over time, we're just building the list, right? And then, as I'm meeting more and more and more people, it should automatically upload their emails into Bumble.
When you say email, I mean, would you do like a bomb email so they can kind of see you and, oh, gee, I thought that was for a while, as opposed to just getting on, I think that might be an intro easier than just getting on the phone and trying to contact them, because people don't answer their phone anymore. I mean, sorry, because I'm getting mine even my cell phone now, I don't even wanna answer because somebody's trying to sell me something.
Yeah, no, oh my gosh, it's a jungle out there right now, I don't know what's
And
going
it
on.
used to be, oh, call people, answer your
Yeah.
phone, I'll hit your phone, now it's like, you gotta be kidding.
You're like, I almost have a screen. No, okay, so I totally see what you're saying. I'm only calling people off BombBomb who I can see have opened and watched my video.
That's what I mean, you send the
Yeah.
BombBomb first, reconnect a little bit, then you make the call, that's what
Bingo,
I'm saying.
bingo. I'm not calling the whole list. That would be too much. I would not call that entire list every 2 weeks. You run out of things to talk about, blah, blah, blah. But if people are watching the video, it's for a reason, right? So the other amazing thing, once you've recorded them, you put them on your Facebook page, so you're hitting them 2 ways. All right,
Is BombBomb free or?
it's like $10 a month.
I was gonna say,
BOMB.
yeah,
It's
it's like 500 a year.
Yeah, it's wildly inexpensive, you guys. Like, any tool that I'm mentioning, it's because I use it, and it's probably the best for price vis-a-vis usefulness. But BombBomb's cheap, and people who are looking to run a sphere-based business, the key is, let's get a list, let's get a good list going, let's look and see who's watching the videos, and then let's only call those people. And then for the 10 who are in your actual most loved on group, I want you to do something for them quarterly. Just quarterly, right? So drop a little gift, take them to coffee, casually mention your real estate business. Don't put the heat on. Don't make them regret they went to coffee with you. Like, just mention, hey, if you know anybody, I'm looking for clients, I have a great investment deal, I think there's amazing margin on it, something like that, something that's gonna be engaging. All right, agent-to-agent referral. I'm gonna talk about this real briefly, and then we're gonna talk seller prospecting really briefly, because I've just noticed we're literally almost out of time, and we've talked about one slide. So, all right, agent-to-agent referral. Let's go back to the BombBomb thing. If you are not currently sending out a notice to every agent in every complimentary MLS right now, that's the one thing I want you to walk away and figure out how to do.
Oh.
If you are not currently sending out an email to every agent in every complimentary MLS, that is the one thing I want you to do. So what are our complimentary MLSs? Yell them out. Prescott, Yuma, Tucson, White Mountains, Sedona, right? So how would I go about this, you may ask? I would literally call an agent in Prescott, and I'd be like, hey, I will trade you a downloaded Phoenix MLS for a downloaded Prescott MLS. And then I call a Sedona person, and I do the same thing. And then I call a Tucson person, and I do the same thing. Might you get some no's? For sure.
What do you mean a downloaded?
So, like, the Prescott MLS can actually be downloaded.
Is it free?
It is free to download. I can download every agent off the Prescott MLS instantly. So, believe it or not, most of the agents up there don't know anyone in Phoenix. Don't have anyone that they refer their deals to. So I want you to set up an email that goes out once a month that says, I pay 25% for any greater Phoenix area
Of course,
referral.
you're downloading the contact information, not the actual.
No, you're just, you're downloading all the agents. So you just statistically, if you get every agent in Tucson, every agent in Prescott, every agent in Sedona, every agent in the White Mountains, and you're sending an email to all of them with any email, no matter how crappy, you should get a referral every single time it goes out. It's just a numbers game.
Once a month.
Once a month.
Okay.
So I think this is the easiest, lowest hanging fruit, and nobody does it.
How do you download the list?
So on ours, there's just a little button you can push. I don't know because my admin does it. But if you go in, like, and Google it, you can find it. Or Or, I mean, don't everyone bombard Kelly and Jeremy all at once, but I bet if you ask for, I mean, aren't there like 2,500 agents just in my home group? So, why wouldn't you just ask for that list? And then just go trade at places.
And what if you can't afford the 25%?
But you're not paying it up front, you're only paying it at closing.
I'll shut up. Okay.
Yeah. I'm like, but wouldn't 75% of something be more than 100% of zero? So that's what I love about it. Agent-to-agent referrals are actually one of the cheapest, easiest, low-hanging fruit. And nobody does it. Nobody's asking, right? So if you just made it your business to send out a referral that went out every single month, and you added to that database every single month, what would you do for your business? Right? Like, we all have channel accounts, or want them if we don't have them.
Do that also for
Yeah, I mean,
for different states.
I would get everybody that I could possibly get on my email, knowing that there are going to be some unsubscribes, but people wait until they have a perfect email that looks amazing. And I'll tell you right now, mine is the like jankiest PDF you've ever seen. It literally only says, "Hi, I'm Isabel, and I pay 25% for referrals." And every time it goes out, because of the number of people on the list, I get a referral. Yes.
What email are you using? Because most of them have like a
MailChimp.
limit.
MailChimp. So the more you have in there, the more you pay for MailChimp. However, most people aren't going to have so many at the front end that it's not free. So at the front end, MailChimp's going to be free. So we're literally talking about a free tool. You just have to like get some elbow grease to get the list. Then you have to put together an email that you can copy and paste 100 times so that it goes out every 2 weeks for the next 200 weeks. And you're good. And then you're just adding more data and more data and more data, such that every time it goes out, you get a referral every 2 weeks.
2 questions. One is, what's your success rate in when you send out these emails?
Mm-hmm.
Second is, if you get unsubscribed,
yep,
do you not get put on automatically on Gmail's spam?
So you would. So my recommendation is just to set up like a referral account that would forward emails to you. Usually, if you're adding to a database over time, you're not getting mass unsubscribes simultaneously. Does that make sense?
Yeah.
I upload a list, I let it go out a couple times, the people who aren't interested unsubscribe, then I upload another list. I have made the mistake of uploading like 200,000 people all at the same time. Go big or go home, right? Yeah, we've crashed it before. The way to get around it is just do one list at a time, let them unsubscribe a couple times, and then do another list.
What's the maximum you can send out?
There is not a maximum that I am aware of, but you will have to start paying at some point. However, who cares if it brings you leads? Like this, to me, better than Zillow, better than Facebook, better than Open House. It is amazing source. You do have to pay 25% when you close it, but really, I mean, it's to me, it's low-hanging fruit. All right. We have only 5 minutes left, so what I think would be useful to talk about in the last 5 minutes is where we get seller leads when we're cold calling. Does everyone want to talk about that, or is there something else pressing that everyone wants to talk about? All right, so I love cold calling. It's my thing. If I'm you and I'm in Phoenix, the most competitive calling atmosphere in the world, here are the lists that I personally would be calling on because I think they're amazing. All right, first one, notice of default. Who knows what notice of default is? It means your house is in foreclosure. Who has a better motivation for moving than someone whose house is actively in foreclosure? Right? Has anyone ever worked with a seller that's like, well, if it sells or it doesn't, that's fine. Whatever happens is fine. Wah wah. I really wanted to sell. I don't know about you, but I like to make money. Notice of default, we're working on a timeline. I really like that. normally they have equity. So for those of you who are concerned, oh, what if this doesn't have equity? They normally have equity. 60-day late is going to be the same deal. 60-day late you get from your title company. Notice of default you get from the tax records. Old expireds, so or canceled. So I would go through the MLS, and I would pull.
I'm sorry, Clay, so
Okay.
notice of default is from who?
Notice of default you can pull from Monsoon. So
Thank
there's
you.
literally a button that says foreclosure, and you can search foreclosures.
Okay, thanks.
60-day late you've got to get from your title company. Old, canceled, and expireds. So I would go back 5 years and pull all the old, canceled, and expireds. Not the ones that expired yesterday and 50 realtors are calling on them, so they're jerks and they're yelling at you. That was obviously a very bad experience for you. I would call the ones that have been expired at least 6 months, have not gone back on market yet, so we're going to check to make sure they didn't sell, and have been expired for some period of time. Normally when a property canceled or expired, what is the reason for that? Yeah, price is wrong, totally price wrong. And what has happened in our market in the past 3 years? Skyrocketed, right? So it's a really powerful conversation. Hey, I see that you were on the market, some time ago. The market has appreciated a lot since then. Would you still be interested in selling it? Okay, last but not least, secondary residences. Who's called on secondary residences? You guys! This is my favorite list. All right, so you go into the tax records and you pull anybody whose primary residence does not equal the tax residence address. Yep. If that is the case, you know it's not their primary residence, right? So we have one of two scenarios. First is it's a vacation home, right? They're a snowbird, they bought it to come here periodically. What invariably happens with secondary residences, vacation homes? You never use them. You think you're gonna use them, you don't. Then the roof starts leaking and it becomes really expensive, and everybody just thinks, why don't I just have an Airbnb that I can rent this once a month and I wouldn't be paying for the roof? And then they want to sell it. So that's the first scenario. Scenario number 2 is you're a landlord, right? You, I find, fall into 2 categories if you're a landlord. Number 1, you love rental properties. You think they are a really important part of your investment scenario, and you want more of them. If that's the case, I can help you. You hate rental properties. You think it was the biggest mistake you've ever purchased. You need to sell it immediately. If that's the case, I can help you. So from my perspective, it's one of my favorite lists of all time. It's just a really powerful list, right? Like, ultimately, if I'm targeting specifically people who I think are going to buy or sell with me, I like to call when I can win. Like, every time I hear somebody be like, I like to circle call, I'm like, oh yeah? Not me. I like to call people who I think are going to list relatively, do business with me pretty close,
How would you approach those homeowners who are has a notice of default? I mean.
Okay, great question. Great question. So I used to start off with a script that did not make me happy. It was something to the effect of, and you can Google it, it's a Kevin Craig script. It would be like, hi, this is Isabel with my home group. Hey, I see that you have a foreclosure on the property, and I'm just calling to see if you've done anything to stop that foreclosure. You guys, I hated it. A, I felt slimy. B, I felt like I was approaching them with too much information. For instance, has anyone ever come and talked to you and they just seem to have too much context about you and it's sort of creepy? I didn't like it. So the best script that I found for notice of default is, hey, my name's Isabel, I'm calling with my home group, and I'm just calling to see if you've ever thought of selling your house. If you have, and you're in foreclosure, it feels like kismet that someone called out of the blue. They go, I have. What brings you to my door? If they haven't, then you don't have to feel like you're a bottom dweller. right? Like, nobody likes to feel like that. And ultimately, serving these people is the same as serving anyone else. The goal is to help them get out of a tough spot. The goal is to provide them with a high level of service. The goal for me is not to have a conversation that's going to embarrass us both. All right, who else? We're at the end of our time, and I'm bummed because I had even more to share. But who has a question that they're wanting me to answer before we break here?
Can you put your number on the board?
Yeah, of course.
Thanks.
What is your team, Isabel?
My team's the Stonebreaker group. Yeah, up in Prescott.
Can you find better times to be contacting people? I know a lot of people get up in the morning, they start making their calls or whatever. And I think this issue where I don't like to call people, it's kind of catch-22. You call people and, well, now they're gonna be at work, they're not gonna wanna talk to you. Or it's early in the morning, what are they gonna be talking about, they wanna hear from you. And then if it's at late, they're gonna be eating dinner or whatever. Is there any rhyme or reason to that?
So statistically, the best time to call people is 4 to 7. I call from 9 to 11, and I'll tell you why. I can control it.
9 to 11?
9 to 11 a.m. I can control it. I can time block it. I'm not putting out fires from 9 to 11. So most realtors never call us before noon, right? So it is more possible to give everyone in life a higher level of service if I make the call 9 to 11. I will tell you that if you call at a different time, you're going to get a different crowd. So if I call in the morning, I'm going to reach different people on my list than if I'm calling in the evening, for sure. So there is something to be said if I feel like my list is tapped out, to just changing my time of day. But the answer to the question is you call when you can control it. Because it's something that has to happen every single day in order for you to ensure success.
But isn't that most of the working people are busy during that time, 9 to 11, so it's not productive?
No, most people in life are bored. They just want to talk to anybody. No, I'm totally true. This is totally right. Like, if you call and you can engage with them from the other side, they're gonna engage with you.
But aren't they usually at work?
Yeah, no.
They're not.
No.
What are they doing?
I mean, in Prescott, we have a huge number of retirees, but I can tell you that I called in Phoenix from 9 to 11 for many years before I moved up to Prescott, and 9 to 11 works. People have cell phones. You're calling their cell phones. They're gonna pick up. People will pick up at work, people will pick up at the doctor's office. I just think, what's your alternative? Never calling at all?
But the 4 to 7 was one of the statistic ones that you talked about?
Statistically, it's going to be better, but here's the problem with 4 to 7.
Everybody else?
You're going to, you're going to be on listing appointments, I hope. So if I'm calling them at work and I'm making an appointment for a time when they're not at work, that's a win. If I call them when I'm not at work and then the appointments I have available are when they're at work, that's no good. So if I'm talking to you, I'd rather talk to you while you're at work and then we make an appointment for 6 o'clock tonight. Now I can take your listing.
Oh. Sounds like we've done this before.
How long have you been in business?
What?
How long have you been in business?
7 years.
Yeah. And how many agents do you have?
We have 5 agents right now. What else? Is there anything else I can answer?
Not for the moment.
For that old business thing, that you run it through, do they run it against the do not call registry?
They do. Shall I tell you something between you, me, and the lamppost?
What missed that one?
Yeah, it doesn't matter.
I call them. So here's my thing. You report people who call? Well, then you shouldn't do it because you have very bad karma.
ADT, if I've asked ADT to stop calling.
Oh, well, I think that's different. Like, if somebody calls you repeatedly, I mean, you've got to get them to stop at some point. But I think one call, just seeing if you can help them, is totally fine.
I think we should respect, if it's,
Yeah.
if they don't, do not call this, we should not call them.
Yeah, I mean, if you
The-
don't want to, you don't have to.
The problem with that is, the problem with that is, there's a whole lot of, there's people that have like 15 numbers listed, and 3 of them are do not call, and the other 12 are, so what is it? Is it do not call, or is it call?
Here's my thing
Like-
too, guys. Like, I really think life is short. And maybe the next time you see me, I'm gonna be in orange jumpsuit in prison. But, so, you know, I mean, there you go. But, I found that the number one thing is just to be courteous. So if somebody says, please take me off your list, you actually do. And if they yell at you, you just go, oh, I'm so sorry. This is just a big mistake. You have an amazing day. Like, if you're really nice, why would they spend their life energy reporting you? So that's number one. And number two, like, ultimately, if I know that doing a specific activity is gonna change the life of my family, change the life of my team, change the life of the people around me, and it's gonna be beneficial to our sellers, because I truly believe that we're providing the very best value in town, I'm gonna do it.
And you never know, sometimes when you made the decision to not call me,
Mhm.
you were in a bad mood.
Yeah.
You might need the service.
Yeah. Well, and that's exactly the thing. I mean, ultimately, I'm not gonna call you 100 times repeatedly, but I will ask you one time so nicely.
One last question, where do you see the market being taken over by the iBuyers, i.e. the Zillow, the OfferPad, the Open Door, etc.?
Good question.
So, okay, that's an amazing question. I think over time that every agent should have a business that runs that business model too. So at first, when you first get into this business, there's no way you're gonna be able to run that business model. But when you look at your personal business over the next 10 years, I would consider building out a piece that's specifically wholesale based. Because I think there's a consumer out there that doesn't want to clean their house. Or doesn't want to constrain their dogs so that they can facilitate 26 showings. You know, that's a lot. And I can see why there are buyers who absolutely would be happy to sell for 80 cents on the dollar if they knew they could do it instantly, that they wouldn't have to clean up after their kids or their dogs or make any repairs. So ultimately, if we see this niche in the market, like I hear so many realtors saying, oh, they're destroying our industry, blah, 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 they're gonna eat our lunch. I'm like, okay, put a pause in that. What's really interesting is that they've discovered a hole in what realtors have been doing for years, right? Like we've been doing the same thing, and there was absolutely a demand for, I don't wanna clean my house. So, if we know there's a demand, amazing. Let's build out a part of our business that does the same thing, even if it's not today, even if it's only long term, because there's no denying that OfferPad makes money, right? Why don't agents want to make money too? I mean, that's my opinion.
So what action would you take? They pay 1% agent referral fee. Would you just give them a referral, or would you buy?
No, we buy it. So on my team, we have a retail team, we have a wholesale team. We will buy properties off the market if we think they're a deal. So typically, if somebody comes to us and they're like, oh yeah, I just need a cash offer, we would refer them to our wholesale business. Our wholesale business would make that offer. If they want to move forward with it, fantastic. We would either buy it, like I would personally buy it if it's an amazing deal, right? Like what's funny is, I said I've been in business for about 7 years. I did not start doing this until 2018. And you know what, guys? I actually specialize in distressed properties. It's one of the things that I'm really good at. Finding properties that just need love and selling them to investors. And I can't tell you how many amazing deals I sold to investors before I actually got smart and sold them to myself. What are you, like literally I sold, one time we had a short sale, the inspection was done, we had a buyer, and then the bank denied the short sale, so it went to auction, right? So I had perfect information on what was in the inspection report, which you never have at auction. Perfect information about what it could sell for as is to a buyer if it were listed on the MLS. And one of my investor clients bought it and was like, Isabel, you get to sell it. And I was like, yay. But you know how much he made? 20 grand. That could have been me.
Yeah, but
Anyway, I got wise.
typically, when you had the short sales, you know, that arm's length thing that was really, the way they had it, but when it came to the short sales, there's tons of times I wanted to buy these short sales, but being a realtor, the arm's length thing, all that stuff, that was.
That's what she was asking. So I do not buy my own short sales. That is illegal. But when it went to auction, I could bid on it, and no one had better information than I did.
Oh, yeah.
I've been listening the last 5 minutes, and especially the antenna is right there. You mentioned about, you know, all these offer pad and everything. And you said something about people who don't want to clean up after their pets. I'm a pet sitter also.
Okay.
How would you combine the two?
I just get all their information and I put them on my BombBomb tips, and then I'd start looking at who was looking at those videos. And maybe I might even send out a video that said, want to sell your home but not clean up after your pets, and see who opened it. So, alright, thank you guys.
Thank you. Oh, thank you very much.
Yeah, awesome. That would be amazing. Let me give you a call. Because next time
How are you? I'm good. How are you today?
No,
You still want to talk?
yeah, let's check the chats real quick.
I really need to use the bathroom.
Go for it. I'll be around.
It's
Go ahead.
just a matter of looking into infrastructure, right?
Like sometimes you go, look, if I plug in one or two things, I could make it easier, way further, faster. Yep. Yeah. No, I love it. That's cool. Yeah, I sure will. I sure will. Nice to meet you guys. Oh, thank you. Like if you email our admin, ADMIN, at AZ Stone, STONE, group, GROUP.com, and just say, hey, I talked to Isabel, and she said that I would have the Prescott Realtor list. She'll email it to you. Isabel says I need this.
No, it's okay. I'll wait.
I just wanted to thank you that you helped me tremendously.
Oh, my pleasure. I'm so glad. Thank you for coming. We could have given you another hour, probably.
Yes.
Oh, yeah. I went through literally one slide, so. Yeah, of course you can.
A friend of mine's gonna want to buy something in Fresco. He lives here. Wants to get out for the summer. Pretty well to do.